Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever. Psalm chapter 27, verse 1. The Lord is my light and my salvation. Whom shall I fear? The Lord is the stronghold of my life. Of whom shall I be afraid? Habakkuk chapter 3, verse 19. God, the Lord, is my strength. He makes my feet like the deer's. He makes me tread on my high places. To the choir master with stringed instruments. Deuteronomy chapter 20, verse 4. For the Lord your God is he who goes with you to fight for you against your enemies, to give you the victory. Isaiah chapter 40, verse 29. He gives power to the faint, and to him who has no might he increases strength. Isaiah chapter 12, verse 2. Behold, God is my salvation. I will trust and will not be afraid. For the Lord God is my strength and my song, and he has become my salvation.
What's up, everybody? Good morning. How's everybody doing today? Morning, Mike. Morning, Tony. Good to see y'all. Alright, so we got Powell gonna open his mouth again. It's gonna be interesting. We'll see what happens. We have news every single day, so there may be stuff to do depending on what we see every day. We are going into the end of the month, and when we go into the end of the month, obviously it has the last week has a specific characteristic that it likes to deliver. When you think of Power 3, the monthly has Power 3, weekly has Power 3, daily has Power 3, hourly there's a Power 3, right? But in the grand scheme of things, when you're looking at the month view, the first week, generally consolidation, some manipulation at times too. The second and third, basically the middle weeks of a month, is basically expansion for the most part. And then the last week can generally cap what the monthly range created. Okay? So we're going to keep that in mind, obviously. We've been pretty bullish, to say the least, right? Especially with all the news that's come out. It's continued to go higher, as we assumed it potentially would, based on the rate cuts and the history of the rate cuts at all-time highs. And we'll see what the DXY wants to decide to do this week, but we'll get into that in a little bit. So when it comes to the news, again, there's something happening all week. Monday, the news is at 9:30 or 9 o'clock a.m. Pacific Standard Time. So it's going to be in the PM session that will probably have some dynamic price delivery. Remember, Monday going into Tuesday could be consolidation manipulation. Tuesday may set the high or the low of the week. Wednesday also has a chance to do that depending on what we see from the lens of Power 3. And then, of course, Thursday, Friday, if we continue going higher, right, it may just continue to go higher. But if we retrace, right, say it drops, giving us some type of like rejection going lower, when it hits an opposing PD array, if the week starts off bearish or just, looks like it's bearish going into Thursday and Friday, if it hits a discount array, that may set up the counter trend move to basically cap the weekly range if we're bearish, right? If it declines, because we've been going so bullish. There's a chance for it to just rip higher, right? We're at all-time highs. So rules for all-time highs, obviously, is you just keep going until you're proven otherwise. Keep in mind the the possibility for reversals that then lead to continued rallies higher. That's all we've been seeing as we were creating all-time highs. That's what we've been basically focused on. I wanted to see, obviously, a month ago when we were talking about the rate cuts, I wanted to see a much more dynamic price delivery to come down and sweep out aggressively to the sell side, but we didn't obviously end up seeing that entirely. But nonetheless, we were able to, continue to make sense of what was happening and get in line, as has been the case for the last 9 months. So, we'll see if that can continue. I assume that it will. We haven't been surprised once this year, and that's going to remain to be the case. There's nothing surprising that happens. We understand price and where it's going and what it does and why it does it. So, we'll march forward keeping that in mind, right? That's pretty much how we do things here. So hopefully the expectation for the news makes sense to you guys. And let me see the chat. And Mike, I'm doing well. Same old, right? Hopefully this makes sense as far as what we're expecting potentially. We do have unemployment claims. That's my favorite. 5:30 is going to have a lot on Thursday. It's the biggest news day. And then, of course, we have Fed speech on Tuesday. So we'll see if a high or a low can be formed, followed by displacement off the heels of what he says. We also have PMI. So PMI is pretty aggressive too. So this may be a very chaotic day. There should be opportunity, right? There's going to be volatility. We'll be live on YouTube again on that day. So we'll be here to go through it. And we'll see what the AM session does on that day. But tomorrow the expectation is you gotta be calm. Okay, remember it's the start of the week, so consolidation manipulation is likely, and we have a late news event. Okay, so the PM session may end up being the session that has the more dynamic price delivery. Doesn't mean the AM session won't. It might wait until this news event comes out. Because again, smart money moves, big moves from that higher time frame, or just the large moves in general, they need institutional sponsorship. And most of the time, pretty much all the time, when there's a news event, not every time, but most of the time, it'll start a move. And then if it doesn't, it's probably waiting for something on a different day. Does that mean that there's no opportunity when you're waiting for that? No. You could still catch a scalp, 20 to 30 points. But you just have to keep this in mind so you don't stick around too long, right? And try to turn like a scalp into a swing trade and then end up losing and then blowing your account or, being wrong for no reason. All right, what's up, Chowezi? Good to see you, brother. So, hopefully, this, I guess, foundation for how we're going to view this week makes sense based on the news. The news is like a scheduling tool, not only for like a session, but it's also for like a scheduling tool for things like higher time frame delivery, like I just said, right? So yeah, keep that in mind. Very, very important. All right, and again, it's the end of the week or the end of the month, so I want to keep reminding you that just like how the end of a session can generally be used to cap the daily range, if we've been one-sided, say it's bullish, when we go into like the ending of the session, the candle needs to close, right? It needs to present the opposite end of the daily range. Well, the same thing happens on the weekly range. Same thing happens on the monthly range, right? So the last week for the month generally can be the cap. The last day of the week or last 2 days, depending on if a PD array is met, can end up being the cap for the weekly range, the weekly candle. And, you know, the later portions of the session can end up being later portions of the last session can end up being the cap for a daily candle or daily range. Okay, so you want to make sure you're looking at things from that perspective. Same thing also happens with the 1 hour chart, right? If you're looking at a 1 hour or a 4 hour power 3, right? The last portion of an hourly candle will present you with a wick a lot of times, right? Same thing with the 4 hour. Same thing with, you know, the 2 hour, the 8 hour, right? Every time a candle's printed, depending on the time frame, this phenomenon is going to take place, as I'm sure many of you guys are aware. But maybe you haven't thought about it from that perspective with like the 1 hour candles, the 4 hours, 8 hours. But this is a great thing to go in and study. Okay, so definitely for the drill this week, let's just set this right away. The drill I want to have you guys do is study Power 3. If you use it, great. And if you've been doing this already, great. You should obviously have been doing this already. But when it comes to, or at least for the weekly, monthly, and the daily Power 3s. But when it comes to like the 1 hour, the 4 hour, the 8 hour, you're going to also want to add that to your studies too. So if you guys want to drill, I encourage you to do that, right? And go look at Power 3 from those perspectives. Okay? So yeah, hopefully that makes sense. As always, we're going to start from the bonds and yields, right? The bonds and yields are heavily impactful. So let's start with the yields and then move on to the bonds later. So let's go to the quarterly so we could get a feel for this new quarter, how it's begun. So as you guys are hopefully aware of, we are in a new quarter. We're in the fourth quarter. Dun, 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 right? It's a lot of times the fourth quarter is generally one of the best quarters to trade. The second quarter is also part of that, right? The second quarter is generally fun. Third quarter kind of puts you inside of the summer months. So if you're going to fail, right, or not fail, but take losses or have a more difficult time, generally the third quarter is going to be the time when that happens in the year. So this is a good thing to have an expectation on. Not always, right? We've traded through the summer months and did pretty well. So, you know, you just want to think about this stuff because the same stuff repeats over and over. And just like how the monthly, daily, weekly, and other time frames have the Power 3 phenomenon, the quarterly perspective has the same thing, right? The yearly perspective has the same thing going on. So certain times of the year, there's a certain expectation. So you could just see how deep Power 3 can go and why it's like literally a pillar or a foundational piece of information you got to make sure you're going to pay attention to. Okay, and why is it important? Above all else, it helps you with price navigation. It helps you navigate price so you're not confused, right? Or feel like disjointed, like driving without a GPS, right? This kind of helps you get more precise, have more precision and understanding as far as how price operates. And those lower time frames obviously become a lot more clear when you can make a determination from these higher time frames and when you understand things like Power 3 and how universal it is across all the different time frames, right? So obviously different time frames have their own part to play, right? The higher time frames obviously for bias and narrative in the grand scheme of things. So then you can use that to go into the lower time frames to navigate. And then obviously the lower time frames plays a role inside that bigger perspective, right? So it kind of just grounds you, right? So So yeah, keep that in mind. And of course, we're on the 3-month chart. This is a quarterly chart. We could see that we've just began the fourth quarter. Okay, so we're in an indecision candle. Previous quarter's high and low, right? That's going to be something significant. So let's actually clear the board, start over. And then we could just start from ground zero. So who remembers the very first thing that we look at when we're looking at a chart? What is the first thing you need to identify when you go to these higher time frames? There's a specific set of things that we have to do. And what comes first? After we go from the news and we move up to the highest time frame we're going to look to observe, which in my case is the 3-month chart. What's the first thing? Previous highs and lows. Previous month's highs and lows. Exactly. So why is this important? Do you guys remember why this is important? Let me hear an explanation as far as why this is important to do. Because I've learned over the years that if I don't know why something's important, I just am told that it's important. I mean, it's obviously going to be something I'm not going to put too much stock in, right? I'm not going to really care too much about, or put as much emphasis as I should if I don't know why it's important. All right, do you guys remember why? Why we start here? It shows us where the movement had most impact. Okay. It shows swing highs and lows. Swing highs and lows, pools of liquidity. Yeah, for sure. What else? And where external liquidity is also internal, right? Like these lows would be internal, right? But the most important reason, or the most salient reason as far as why this is important, that it obviously tells you liquidity, so you guys aren't wrong, right? It tells you most near-term liquidity, but it's also giving you your range of opportunity in terms of what's important, especially if you're on like a quarterly or a monthly time frame. Because people will get on the chart and a lot of times their attention goes to here, their attention will go down here, oh, there's a gap down here, there's an order block here, right? And they look at these things and maybe they look at the highs up here, which is significant, it is somewhat close. But the first thing that's going to have to be taken if this chart, or like the monthly chart, let's say this is the monthly chart, the first thing that has to be taken is that previous candle. And the first price action you have to navigate is within those extremes. So it keeps your focus on what's most important. It keeps you grounded in the most salient objectives. And of course, we may gravitate up to something like this, or maybe it does get down into this, but that comes later. We don't have to concern ourselves with this stuff, right? Like this is too far. This is too far for right now, right? There's a lot of price action that needs to happen in order for us to get up to here or down to here. So this liquidity, because this and this have to be taken first before it does either one of those things, this range of opportunity is the most important. Okay, so that is why, alongside some of the other things that you guys mentioned, why this is so important to start here. Because you have to have a blueprint. You have to have a lay of the land, right? What does the landscape look like, right? And then, this is a very simple tactic to get you in line with the most important levels in price. The price is going to have to break in order to get to this or anything down here. Okay? Why did it not change? There we go. Okay, and we got the quarterly low. Got the quarterly high. I think I'm just going to attach this to this high because it's super close. Those are relative equal highs. So yeah, we'll keep that in mind. And then the next thing we do after we look at something like this, right, and get a feel for what the most important liquidity pools are, we now start to look at PD arrays that are in close proximity. Okay, so this is a quarterly order block. You can also make an argument that this wick is important too, right? This wick quadrants, as price pushes up, we've talked about this forever, right? And of course, ICT recently, in one of his recent videos, trading at all-time highs, or in one of them, I think all of them actually, he's mentioned the importance of wicks. We talk about the wicks constantly. Why? Because we're ICT purists and we're good students, right? We're good ICT, I was gonna say like disciples, right? But he isn't a god. But we're just part of that piece of the trading industry, and we don't really mix things. We're not Frankenstein approach type of people. We're purists. At least I am here, and I encourage you guys to be purist as well. No indicators are going to mesh well with ICT concepts, and anything else is just a distraction. If you're trying to learn ICT stuff and you hear someone talk about supply and demand and all these other things, it's just a distraction, right? It distracts you from what is being taught. So ICT concepts then, as a result, won't work for you, or it'll make it much more difficult when it could just simply be ICT purist and just use ICT concepts how they're taught. Obviously there becomes like there's easier ways to do things within the realm of what ICT teaches. He has admitted himself that he's made it complicated on purpose because he doesn't like that people were stealing his stuff. He has said it multiple times, and he said that the 2022 model not only was dropped because his daughter didn't want to use that model, which it was hers, but he also dropped it to the public because he, on a Twitter space, said that he felt guilty, right, for making it so difficult for so many people who didn't steal his stuff, right? He wanted to help, and he kind of made it more difficult. So he has like a guilt, I guess. He said it on a Twitter space. I'll try to find that one so I could let y'all listen to it because it's a really good space. But yeah, there's easier ways to apply things. And so whenever you hear me talking about things, I don't ever rename things. I don't revamp the things that he talks about. I just apply them in a more simplistic way and explain them a little bit more simply, right? Because I'm not intentionally trying to make things difficult. I want you to learn this stuff because it took me so long to simplify things. I had to learn all the stuff that I had to learn, go through pretty much all like 2,000 videos that he's ever made, from the private group all the way up to the YouTube channel. YouTube first, obviously, but then into the charter level and commentaries and all the different things that was provided. And then I discovered that there's much easier ways to apply things. And of course, as I was trying to simplify, this was before he admitted that he made it difficult on purpose. And so I was like, oh, okay. It just like solidified the fact that I can simplify it and I don't have to second guess the simplicity, right, that I was able to discover. So you're going to, hopefully have the same perspective as you gain more experience, especially by spending time here, because I've already kind of, got to the point where I've simplified it for myself. And then, of course, I'm trying to pass that on to you. And I think from what I've been hearing, I've been doing a pretty decent job of doing that. So, I hope to simplify it more for more people. Right? So, yeah, now we got an order block. So, like I said, we targeted or identified the most salient liquidity, which is, these highs and these lows, based on this 3-month chart, which is a quarterly time frame. And so now we move on to PD arrays that we're going to look for, right, or utilize in close proximity to price at the moment. So let's go see if I can find it. Where is there it is. It's a quarterly order block. There's another one down here. I mean, that's pretty crazy how perfect that is, huh? Is it the close? So the close is 4.578. The open on this, okay, it's like one point off. Let's see, 8. So yeah, this candle is not inside of this order block's body, because if it was, say this order block was deep into this, that'd create a propulsion block, right? So because this is not, it's literally 1 point above it. It's not a propulsion block. Yo, Brown, Strat King, you read my mind. Yes, you're absolutely right. But because it didn't close in it, generally it overlaps it a little bit more, right? It has to trade into it. It's an order block within the range of the previous order block, right? And then of course, a stop punt is obviously a good thing to see as well. But these are just order blocks stacking on top, right? Because it didn't trade into it, right? Into the overall range, it's not technically a propulsion block. At least I wouldn't consider it as such. I don't think it's going to need to come down into this. I think that it should be able to hold this and continue to go higher here, assuming that obviously that's what it wants to do. If the rate cuts are going to have the effect that we've seen over the last 20 rate cut announcements at all-time highs, which is the next 6 to 12 months is bullish and bearish for the DXY, this may not occur. We may see this break down and get down below this, right? So another thing we want to identify too is this down wick here. Okay, so you're going to want to keep that in mind just in case it gets down there. If we fail to get down there, right, and it can't at all get even close to the 50% of this wick, we may continue to try to get up into this level, and then maybe it takes that, then decides to give up the ghost and drop lower. But yeah, so we will see what it wants to do. We're inside of a range-bound environment, right? Overlapping candles. Do you guys remember what the condition is? When we see this type of thing happening on any of these higher time frames, whether it's a quarterly, monthly, weekly, or daily, or even a 4-hour chart, 8-hour chart, do you remember the condition that we automatically place on the market? What that is? Is it trending, high probability, or low probability choppiness, right? As an expectation, right? Which one of those is it when you see overlapping candles like this? See if you guys remember. Chop, yeah, it's low probability, basically, right? So you'd expect low probability, consolidate, yeah, exactly, Chowezi, exactly. Does that mean you won't find a trade? Does that mean you have to sit on the sideline and not take a trade at all? Or be fearful of taking a trade because it's doing this? No. If your model's there and you're aiming at 20 to 30 points, you got to just aim at 20 to 30 points. You take the bare minimum that's offered when you see conditions like this. Okay, you don't try to get home runs. You just, if you must trade, right, if you're going to, which, I'm going to, right? Like, this is a 3-month chart. I'm not going to wait till it breaks out. But when you see this, you just got to make sure you're able to manage your risk, right? So maybe half the risk or 25% less of your normal risk is going to be exposed, right? And you're only going to target, you're going to limit your targets. You're not going to have them as 100 points or these massive, huge moves when price is clearly indecisive. It's clearly overlapping. We need a breakout. What does small ranges lead to? Small ranges lead to, let me know in the chat. Small ranges generally lead to what kind of range? Big moves, large ranges, right? So small ranges lead to large ranges. Large ranges lead to small ranges. Okay, so we'll see if that phenomenon is going to take place. Yeah, exactly. A good way to put it too is consolidation leads to expansion eventually. Exactly. Right? I see. Of course, that sounds a little more complex than small ranges lead to large ranges lead to small ranges, right? But yeah, you're absolutely right, Brown. Yeah, so all you guys got that. Okay, good. So we'll see, obviously, what it wants to do within this. It is a mess, obviously. When the bonds and yields are consolidated, what does that generally do? Generally, not all the time, but what does it generally do to the other assets that are affected by it? Does that promote a trending environment, or will that end up leading to something that could be a little bit harder to trade, harder condition? Do you guys remember? All right, when the bonds and yields seem like they're having a difficulty moving in one direction, and they're just like chopping, what does that do to other assets? Does that encourage trending, or does it lead to a little bit more difficult conditions, which you're going to have to manage your risk around? Harder conditions, exactly, right? It leads to an expectation. This is very important. An expectation of low probability, right? Of a lack of interest to trend. So this is very important, right? Why is this stuff important for me to talk about and spend time on? Because you're learning price navigation, okay? You're learning how to anticipate certain conditions in the marketplace. These are also things that help you learn when to trade, when not to trade, when to push, when not to push. Like, these are very important, much more important than where is an order block I can take an entry on. Because that order block you're trying to take an entry on, if it's inside of something that looks like this, it may fail and you may not be ready for it if your anticipation for this is not there, right? Or your understanding of the conditions and like your conditional awareness is not sharp, right? So that's why this is important. That's why we're spending a decent amount of time on this type of stuff. Risk management is, yeah, whenever you see this, again, you just want to make sure you cut your risk. Obviously, you can do or make adjustments however you would like to. I do encourage as a default though, when you see things like this, especially if it's on like the weekly or the daily, you want to make sure you're managing your risk. You want to cut it at least 25 to 50%, maybe 75%, depends on you as the trader. And then of course you got to tighten up your targets. Instead of using maybe daily highs and lows, maybe you'll use session highs and lows, right? Or hourly highs and lows, 4-hour highs and lows potentially, right? So yeah. Hopefully all this stuff has made sense. But again, the liquidity pools that are important, we can measure out this. Like I said, we got all our different liquidity pools for this time frame. We're probably not going to mark off much more. This ended up breaking down below this, so I'm not really too excited about using this level. I mean, it may have some sensitivity there. Clearly, it's kind of stuck. We didn't get this high taken, but we did get this buy side taken. So sell side's taken here. Buy side was taken there. Okay, so because this is the range and these are the swings that took buy side and sell side, and we have a swing low to swing high, our equilibrium point for the current range is here. You could move it up to this high. I mean, it doesn't really make much of a difference because it's so close. And obviously this is, a high with the high up here. So you could measure it from either this high here, because this is the one that took a buy side liquidity pool and a sell side liquidity pool, and you can get the equilibrium, or you could just move it up. You could see it doesn't really make a difference. You could see that when we're at consolidation, you could see what's happened. The candles have overlapped, okay, and it's indecisive, right? And that's generally what will happen if you can measure out a range that took, obviously, sell side, took buy side, and you can get a range off that. If you measure that out and we're stuck at equilibrium, that's to be expected. So this consolidation, this indecisiveness is happening around a level where price is in equilibrium on that higher time frame range, right? So that explains, especially the fact that we're in a new quarter now. We just transitioned into a new quarter. That's also a reason why we could see some choppiness, right? Some sideways indecisive price action, because the start of a quarter, right? The first week, or generally like the first couple weeks of a new quarter, but specifically the week right after the quarterly change or the contract month change can generally be anticipated as low probability, right? Or, a lot of times high resistance consolidation is to be expected. Because, remember the rules, right? When it comes to rollovers on new quarters, the week before, the week of the quarterly adjustment, and then the week after, the week directly after could generally be a harder to trade environment. So, we kind of see that happening. And again, we can map out technically what's happening as well that could be causing this. It's stuck in consolidation. There was a heavy rate announcement, right? They cut the rates by 25 basis points. I was hoping they would cut it by 50 because it'd be more dramatic. But 25 is, 25. And we should be able to see the impact of that. So when the rate cut takes place, what's happening? It's cutting this yield. It's cutting the yield that comes from that interest rate, right? Because it's lowering it. So there's going to be less. So if that's the case, you look at the percentage here. If it's going to cut the interest rate and the yield that's acquired from the loans based on that rate, is going to drop, this number should drop eventually, right? Or in the near future. If that takes place, that should send the DXY lower, which would then result in what's happened the last 20 times that this announcement's happened, which the indices go higher, foreign currencies go higher, and commodities also should follow suit as well, which they have, with DXY dropping. And that should also lead to the bonds going higher, right? It looks like we're setting that up here, right? But we'll look at the bonds in a minute. Okay, so does that make sense? I hope that makes sense, right? It's taken a very complex idea. Hopefully I've been able to kind of simplify it in like normal human being language, right? As far as what the impact should be, and then what could potentially be expected aside from some of the technicals, right? And it's just some of the fundamental understanding of how things are actually operating. Like, instead of just looking at candles and what the candles are doing, what the back end information is telling us about the current condition. Does the stuff that I've talked about make sense? If you guys got questions, definitely let me know. But I hope I was able to make that make sense. Brown said, so is that rollover week or the week after? So is that rollover week or the week after? So the week before the rollover, right, to the new contract month, the week of, which was on the 17th, 16th, which was a couple days ago, and then the week after. Sometimes it rolls over to 2 weeks, right? Especially if things are kind of stuck in consolidation and there hasn't really been much of a reaction. It looks like it's going to slowly be priced in, right? And sometimes it takes time, right? It's that gray area of time. But a good rule of thumb is the week before, week of, and week after the rollover. Sometimes it could bleed into the second week after, right? But you got to look at the chart and see what it's going to tell you. But again, that's just a good rule of thumb to have. Those are the rules that I employ, and for the most part, it puts us in position to not push aggressively around these times. So it saves us if that's a time maybe we take a loss. It's to be expected that it's going to be a little more difficult, especially when we have this type of stuff happening and we see it in the chart that it's indecisive. It just further amplifies how important this is to understand for price navigation, right? All right, Tony said it makes sense. All right, so yeah, I hope that this stuff makes sense to you guys. Let me know if you have any questions, right? Remember, you guys are here not to be entertained, right? You're not here to see me jump out of my chair and make you like. It's hopefully entertaining still, right? Because you're learning how to become effective. But hopefully it's entertaining enough that you see the value in this stuff. And if you have questions, again, you guys are here to ask questions. You're here to learn. So hopefully I can do a good job at that and getting you guys to that point, right? So yeah, don't be hesitant to ask questions. Anyone that attacks someone for questions, you're getting banned, right? That's never happened before because we have mature adults here, even some mature kids, or kids, right? 18. But yeah, I have zero tolerance for bullshit. And so you can rest assured that no question's stupid. I want you to ask every question that pops into your head. That's the only way you're going to learn, because I can't pass on my conviction to you, right? You have to be able to get the questions answered and apply the stuff, and then you'll, over time, by spending time here, by spending time in your own charts, by doing your own studies, you'll build the conviction and trust. And again, the whole goal of this channel is to get you from confusion or hardship in your learning to clarity. And again, I've seen a lot of testimonials saying that I've been able to accomplish that with many of you. So hopefully I can continue to do that. So yeah, any of you guys that are new, definitely ask me any questions you have. No questions stupid, all right, or dumb or not worth asking. Because for you, it probably is. For someone else, maybe it's not as important. But for you, whoever asks the question, it's important too. So it's important to me, okay? So yeah, with that being said, let's take a little deeper look at this. So yeah, the only thing that's not marked obviously that's important in close proximity is this wick. This range in here, it's not fully going to be created because this is the current candle for the new quarter. So we'll see if this is what gets left. If it does get left, we can use this eventually if price was to start breaking down. We can assume I believe there's SMT at these highs here, if I'm not mistaken. So if we look at this high, yeah, we already have SMT in this as well, so that's going to be important. So that SMT is present, so we'll see. We are in consolidation, so we got to just make sure we're going to be patient and watch how things unfold. Knowing the fundamental things that we just talked about, what the impact is fundamentally when the rate cut takes place, it's going to drop the yields that are accomplished from a loan, or whatever it's affecting, mortgages and all these different things. A rate cut is basically cutting the yield that comes from the interest that a loan provides to the lender, right? So when you pay, you pay for a loan, right? You get a loan and you're paying interest. Well, when you cut the rate, you're cutting the amount of interest that's being paid. So as a result, technically looking at the chart, we should see this come down. And knowing the relationship this has to the DXY and the other assets, you can start to see how that's important, right? So this SMT here is potentially going to be an early sign of what's to come. We do got failure swings from this high and this high, this high, and this high. And we have SMT here with this high here, right? So we'll see if that leads to something declining. If we look at these other assets too, I'm not going to mark off these the way that I marked off this one because it's pretty much all the same. They should follow each other. They're pretty positively correlated. It's just different time intervals for the loans, or pretty much like the loans, right? And just it's a 30-year view, right? 10, 5. I don't want to get too technical with the things and confuse you guys, but they pretty much work the same, right? They should, right? And then of course this market has an impact for the overall DXY, right? This is also obviously this is for the bonds too, so the yields coming from the bonds, because you can buy bonds from the U.S. and there's yields that come from that as well for the interest, right? That is gained, and if you cut the rate, obviously it drops the amount of interest you can make, right? So. And then, of course, this has an impact on things, like I said, mortgages and all that. So, but yeah, so we got the lows here. So that is pretty important. If we are going to drop, that'll be where it's headed. But again, the most recent candle, because it's a higher time frame, it has to break through that first. So if you're going to frame something, this is the most important range. This may come later, and that may be where it's going to gravitate to overall. But first and foremost, it's going to have to break through something like this, equal lows, right? You see that? That's a very, very nice low-hanging fruit target for this candle to punch through, right, is the fact that these are equal lows here. Okay, so we'll keep our eyes on that. But again, we are in consolidation, so we do want to eventually see a breakout of some kind. And I think it'll come later on. So yeah, let's move to the monthly chart. That's all I will be marking off on that chart. Okay, we got, again, this order block here. It's a quarterly, move down to the monthly. We can also see it's also a monthly order block. So that's pretty nice to see. We could see that, price came up here, created the SMT, and the prices started a decline in here. We shifted market structure here. Pretty nice push lower below that. It is still in consolidation. If you take the high here to the low that swept out liquidity, sell side, buy side taken, equilibrium's right here. Remember, consolidation on the higher time frames generally going to hang out and accumulate around equilibrium. Equilibrium also, if you guys remember, generally is the start of the displacement that breaks out, right? If this breaks out in here, the breakout started in at equilibrium. If you go back and study equilibriums on the higher time frame, you'll see that this is a common reoccurring phenomenon. As price was consolidating at equilibrium, when it pushes away, doesn't matter which direction it goes, generally the starting point of when that breakout is created that gets outside of the range it was dancing around in is going to be rooted in the equilibrium. It's going to start around that level, right? And also, it could be above it, right, in a premium above the equilibrium if it's going to go lower, and then it could be below, which ends up going higher, right, breaking out from that level if it was bullish, right? But we're not going to be focused on that just yet, because we're going to potentially want to see price go lower here, especially if we want indices and the other assets to go higher, because the yields need to do the opposite. They're opposed to what foreign currencies and what the indices are doing, right? And those are opposed to the DXY. This follows the DXY, or vice versa, right? The DXY follows this asset. So in terms of the overall risk on, risk off understanding, overall market symmetry as a whole, the relationships that have to take place for us to be in a healthy environment, that's part of it, right? How the yields relate to the other assets and how it relates to the DXY. Okay, so we have a shift below this low. It is inside this quarterly bullish order block. I would like to see us break this quarterly order block, which is also, as you can see on this monthly chart, it's also a monthly order block, right? So we want to see, ideally, price start to show interest in closing below this, because then we'll start invalidating PD arrays. Then, in that case, we will have one PD array violated, a second PD array violated, right? Early signs that price is potentially going to drop, and then we do have a volume imbalance in here too. Okay, so I would say that if we close below this 50% level of this order block here, I'm going to take that as a pretty early sign, on top of the fact that rate cuts should drop this market and we want to see the indices and the foreign currencies go higher. That would be an early signal that, okay, things are now shifting. We may see a quarterly shift taking place. So yeah, let's actually pull something related to that up, actually, because this may be a very, very good example to save and then watch how it unfolds, because it's been going higher here, right? It was going higher. We're expecting that DXY is going to go lower because we want the indices to go higher, because the rate cuts the last 20 times is at 100% rate of rally, literally 100%. I didn't know this until last month, until I was digging into some fundamental resources that I look at. And once I saw that, I was like, holy crap, that is insane. The end of the year, too, for indices generally rallies. So a lot of seasonality things are kicking in line, along with the fact that the rate cut, right, it should do what it has done the last 20 times to the indices and foreign currencies and the DXY. So yeah, with that being said, just another layer to us anticipating this potentially dropping. Again, we have this line in the sand here. I'd like to see it close below that, so then it could close below these 3 PD arrays, right? The volume imbalance, the swing low here, and then of course the order block. But if we take the month that started the new quarter, okay, this is how ICT has taught us to anticipate quarterly shifts. Okay, so make sure you are paying attention if you haven't heard me talk about this before. Very important stuff having to do with IPTA data ranges. This is one way that you can do it, and you could only use it this way and you'll still be able to get value from it. There's other ways to obviously follow it as it goes, but the liquidity mapping principles that I give you guys, it's a lot more simple. It's a lot more easy, right, to follow. The list of liquidity pools on a daily basis. I have that in the Discord, in all my Discords, the free and the paid, so you can go grab that. But this is one way that you can use the IPTA data ranges, okay, so to anticipate quarterly shifts. That's the role, okay, just for a preamble, right? So let me see if I can find my stupid tool. Where the hell did it go? Where did it go? Am I like missing something here? Wait a minute, did they take it off? Wait a minute, I am totally... There was a tool that was like a data range tool. I don't see it anymore. I had it last week. I think it was in here. Did they take it off? That is the stupidest thing if they took that off. It's this tool right here. What the fuck? I don't see it. Why would they do that? Unless I'm like totally blind right now. I don't think so. I think they took the tool away. What a stupid... Oh, it's right there. Okay, so it's in that. All of a sudden, it just popped up. What? Wait, when I was looking at this, did you guys see this here? The measurer? Or was I blind? I could have... It was not there. It only showed this. Until I just clicked on it on the other chart. Did you guys see that? That was the stupidest thing I've ever seen. Check on your guys' chart to see if it's there. If they freaking took that thing out, if I didn't have it on one of my charts, yeah, good idea. I have a couple things starred. I need to definitely star that. Holy crap. Wait, did you guys look and see and it wasn't there, right? Or am I tripping? That is so strange. It literally wasn't there right now. Unless I'm totally tripping. See, now it's there. What a weird situation. That was so strange. All right, so let's actually move down a little bit. So yeah, back to what I was saying. Holy crap, that just totally like... I hate when they change things that don't need to be changed. I was about to be hella upset. Like thinking about like, oh, what else did they take away? All right, so we will put... Here, let me actually move this up a little bit. So we're going to cast forward 20 days. See if I can get a little more accurate. 40 days. 60 days. Okay, so let me see. 36. 20 days. All right, so you would take this, and then you basically go from the 20th day, which we're quickly approaching. You take it from the 20th day to the 60th day. Let me see, do I have... There it is. Okay, so this is the window that ICT teaches about when it comes to... It was... Daniel, it was there? Damn, I was just like blind, huh? Damn, I was about to be so upset. I could have swore it wasn't there. I don't know. I don't know. Maybe it was there. But yeah, God, thankfully I woke up to it. Jesus. But yeah, so the importance of the IPTA 20, 40, 60-day cast forward when it comes to quarterly shifts. ICT has mentioned in the teachings where he talked about this in terms of identifying mega trades and quarterly shifts and whatnot. He mentioned that from the 20th day, from the month that has the quarterly rollover, which in this case is September. It was like September 16th, right? Sometimes it's the 16th, 17th, or 18th, but this year it was on the 16th, I believe, where the open interest outpaced the previous. But when you're able to see beyond the 20th day, between the 20th and 60th day, a pretty strong shift that takes place. This may have been an early sign, and now this here, given the retracement, may look to present us with the full-on confirmation that it is going to shift. Because now we're in the new quarter, and we were going higher, right? And it was kind of stuck, and now we've kind of displaced as we headed into that new quarter. Okay. Generally, of course, it happens between the 20th and 60th day. That's when you want to identify it. But something like this could also be valid if this was to hold and we see this continue to drop, you'll have witnessed visually the quarterly adjustment from one quarter, which is all of this, in going into the next one, right? And again, keep in mind the stuff that we've already talked about, right? What the rate cut does fundamentally, and what the impact should be across the other assets. Okay, you do the same thing with the other assets too. You put a line at every single quarter, the start of the month that has the quarterly rollover in it, which in this case, like I said, it's a September month. You put it at the first of the month, you cast forward 20, 40, and 60 days. And within that 20th and 60th day, there should be a significant change in sentiment. Sometimes, if it's like a heavily bearish or heavily bullish market, price will go against whatever that is, and then just completely turn aggressively, creating the shift back in line with the move that's already been taking place. Because there's this rate cut coming, it should turn this around. If we're anticipating a similar thing happening to the last 20 times that a rate cut's happened at all-time highs, which again has resulted in the indices going higher for the next 6 to 12 months, creating all-time highs. Right? Doesn't mean it does it all at once, right? And just keeps going up and never goes down. It will have consolidations and whatnot, but for the most part, that's where my sentiment idea is. That's where my view is at. I'm aiming for this for the other assets to go higher. That's supported by this being a potential shift from the move that was already taking place, from going bullish to then going bearish. This needs to go bearish for us to be in a healthy bullish environment in the indices. If we're going to be trending, right? If we want things to be trending and we want to be able to trust that it is trending, you want to see this one being one-sided, and the bonds too, supporting whatever direction the foreign currencies are going to go in, and then the overall indices as well. Okay, we'll talk about the currencies in a little bit, but yeah, as a rule of thumb, that's kind of what you want to keep in mind. Okay, and hopefully that is clear enough. But you could simply use if the data ranges in this way, and you don't have to use them in any other way, right? You could obviously take it from where price is currently at, cast backwards 20, 40, 60 to try to get a feel for the liquidity. But I personally feel like there's quicker, more dynamic ways to do that. And like I mentioned earlier, the liquidity mapping ideas that we talk about, I think it's a lot more dynamic, right? And then we could just look at the higher time frame and do what we've done all year, which is proven to be pretty insane in terms of accuracy. There hasn't been 1 week where we've got the direction wrong throughout the entire year. And mind you, I go live here twice a week, but I'm live in my private group every single day, pretty much. And they've been able to see it continuously, just as you guys have, but obviously at a higher frequency on a daily basis, let alone just like a weekly, monthly, quarterly basis, right? So yeah, this stuff is highly impactful. You could use this for quarterly shifts, and then you can use the liquidity mapping for daily, weekly, session, and monthly and quarterly overall liquidity targeting and sentiment readings, right? But yeah, so we'll see if this can be a run on stops, right? We'll see if we can get that to simply be just a run on stops, and then see if we could start getting a displacement going to the downside. But this is going to be a very important window we're going to look to identify. We could see that, if that is going to be the case, if we are going to see price decline, and this may be the quarterly shift here, we want to see this react aggressively from this level in here, okay? Right, so we will keep this in mind. We're going to observe the response we'll have from this weekly fair value gap. And I'm going to anticipate that this is going to, let me see. Okay, we're going to see if we can get this to play out like this, something like this, okay? Right, on this 3-day time frame, we have pretty much hit the, fair value gap. So we will see if price wants to use that and then go lower. Remember, we're just starting the new quarter, so it's not unreasonable for them to try to play a little bit of games, because manipulation, right, in the power 3 for the quarterly candle. So we'll see what happens, right? But my anticipation, if we're going to want to see the rate cuts have the same impact that they've had the last 20 times at 100% strike rate, which is insane. It's insane to see that type of data. We should be able to see this confirm something like that in the near future, right? Maybe it uses this to do so, right? So we will keep that in mind. That's my opinion. That's what I'm going to be trying to watch and see, right? We've delivered up here. We used last week to pretty much, decline, and then the end of the week is obviously closed up inside this fair value gap. So starting this new week, we'll see if this can give a response here. It may look to go a little deeper. I would prefer this to confirm, if I could find the tool. The hell is it at? Oh, there it is. I'd like to see us use this as a balanced price range. Okay, because we got sell side, buy side delivery, breakdown below this swing low, right? So it should hopefully lead this to a shift in market structure. That would go hand in hand with what we've been talking about in terms of the impact of the rate cut, which should drop this rate. So, we'll see what happens, right? But this would make sense. And we change our opinion if we were to overlap this fair value gap and close above the 50% level in here. Okay, so yeah, let me, something like that, right? So my line in the sand for bearishness to basically not even be important, we're gonna have to see this get closed above, right? We're at the end of the quarter. New quarter starts 10-1. No, so the new quarter generally goes hand in hand with the open interest changing on bar chart, right? Or at least that's how ICT teaches us to gauge the quarterly shift or the quarterly adjustment or the change in contract month. Because when you come over here and you look at a particular asset, and maybe that's how the mainstream media looks at it, the mainstream view of trading, maybe that's how they look at it, being in October as the new quarter. That's not how we look at it. Same as the open prices. We don't look at the same open prices as normal traders do. We use the 9 p.m. Pacific Standard Time or 12 o'clock Eastern, midnight. That's our open price for the daily. And if you were to use the open prices on TradingView, it's not going to align, right? A lot of the stuff is unorthodox as ICT traders, which is why we're, a lot of times more effective. But if you look at the December contract, the open interest has now outpaced, they've totally removed the September contract. So most of the trading liquidity has now transferred over to the December contract, which is why we utilize this as our, this is basically used as our anticipation for the new quarter to start. This is when our new quarter starts, is when we see the open interest outpace the previous contract. In this case, the December outpaced, in terms of open interest, the September contract. That means that all the liquidity has now began switching over, and once it breaches the previous contract's open interest, they are fully committed to this new quarter. So as a result, we look at that as the new quarter, right? So yeah, got it. You're talking about the contract dictating the quarter. Yes, yeah. The open interest, depending on the open interest on the next contract, basically dictating the new quarter beginning for us, right? As ICT traders, at least that's kind of how we're taught to see it. I wouldn't be surprised if it is a little bit different to the main view of things. A lot of ICT concepts they conflict. That's why at the beginning of the session I was mentioning that we got to be purists when we're trading ICT concepts. Otherwise, there's going to be a lot of friction happening, and we don't want to have that, right? You're going to pick one side or you're going to pick the other. And most of the time when people are merging things together, because of the friction that's happening, it makes it impossible, and it seems more complicated than it has to be. But yeah, I wouldn't be surprised if that's what the main, the main perspective is. It's a little bit different. I wouldn't be surprised in that. I appreciate you mentioning that. No one's ever brought that to my attention. That's good to know. But yeah, hopefully that was probably confusing you a little bit. Then I'm assuming, right? Hopefully not. But yeah, if you're watching, or if you're watching me explain something, and then there's something that's conflicting based on some of the mainstream stuff, definitely let me know, so then I can kind of, explain why it is that we look at things in the certain way that we're looking at it. I appreciate you pointing that out, Brown. But yeah, so you made it make sense. Okay, perfect. I'm glad. So yeah, it's very important to point these types of things out to me, you guys, because everyone's different, right? Everyone's coming from a different background, different perspective. I've been trading ICT concepts for 6 years now, and so I've had to kind of wrestle with some of this stuff. Luckily, I didn't get pulled too much into the traditional way of thinking, because then I would have had to go back and do a lot more work to unwire things and then rewire to this different perspective. But it'll be very helpful for you guys' learning if you have had like the traditional way of thinking, for you to mention it, so then I can kind of say what the view is from ICT concepts as a whole. Just because there'll be a lot of friction, like I said, if it's not clarified. So again, thank you, Brown, for bringing that up. I'm glad I was able to make it make sense. But yeah, so obviously that's the same for everything, right? For all the different assets and futures, it's going to be the same thing. There's no varying, unless of course you go to bar chart and you see that the next contract month has not yet breached the open interest of the previous contract. Then that means you're still in the previous contract month, which that quarter hasn't fully changed yet, right? Like just overall in terms of the liquidity, for liquidity purposes, and smart money. So, but most of the time, when you see the indices switch over with the open interest, the other assets are already ready to follow, if not following sooner. Right. So yeah, hopefully that makes sense. But yeah, this is pretty much my overall opinion on what we see happening here with the yields. That's what my assumption is going to be. We can make a couple other observations. Go to the daily chart. We got a bunch of gaps in here you can measure out, right? You can kind of see the close of this candle here. You can see it's pretty much aligned with the low there. That has a kind of a gap, right? Take the close here to the open of this candle. It's got a gap in there, so it's kind of hit it like a brick wall. So I'm going to anticipate that it is going to slide through that, of course, unless it breaks through my line in the sand, right? We think of 3 PD arrays above price to help confirm or invalidate something. If we stay below this fair value gap on this weekly time frame, obviously this is the 3-day chart. It's reaching into that. Again, if it doesn't want to dig into that level, the reason being is this is a potential balanced price range, right? So we'll see. We don't want to see it come back into the middle portion of this. And you can even take the extreme, right? This is technically a rolling balanced price range because it's within a larger swing, right? So you could technically take this low to that high. Let's see what that measurement is. And you got the 50% level up there as well for that range. But I mean, this is close enough, right? It's definitely close enough. The 50%'s there. If this is a BPR, it should not come up into that level. Well, it should not come into this level either then. So I'm going to use this one. And these up candles should have left a order block on one of these time frames. If we go, yeah, we got one right there, right? So again, us breaking through the 50%, or breaking through the entire range of the fair value gap I have labeled here. Whoops. Go to the weekly. Breaking through this level, getting above it, turning it to an inversion, that would potentially create a BPR bullish. If it trades above the 50% of the order block I just showed you guys, and then closes above the 50% of the balanced price range we have assumed here, that's obviously telling you that we're not interested in going lower. So we'll have to continue pushing this higher, and that may result in something happening to the downside for the indices. Maybe they retrace. I don't see that happening given the characteristics of the rate cuts and how dramatic the reaction's been and how accurate it's been for price to go higher when the rate cut happens at all-time highs the last 20 times in the indices. So in order for that to be supported, obviously we need to see this support this and reject from this level. Again, if it doesn't get too deep into there, or if we just start ripping before it gets up into this level on this weekly perspective, that is going to be a direct result of this balanced price range holding price, and the interest for us to go lower is high, right? That'll give you characteristics behind that assumption. So that's what I'm going to anticipate going into the next couple weeks. Definitely going into this week, I want to see what the tone is, what they're going to do. I do pretty strongly believe that we're going to get this to continue to drop. Maybe it takes another week, who knows, right? But overall, this is going to be my structural framework from the higher time frame, and my long-term target is going to be this quarterly low previously. Before it gets to that, though, we have relative equal lows down here. Okay, let me put this more accurately. So yeah, that relative equal lows there makes me very, very interested in seeing this hold and then target that. Even if it doesn't get down to here, this seems very, very reasonable. Okay, so we'll see if we can get that to take place. And again, that has obviously a strong reversed correlation to what the indices are going to do. So if this is going to go lower, that should then send the bonds higher. So what do you think? Let me know in the chat. For those of you that do know or remember the relationships that the bonds and yields have to the DXY and the foreign currencies and the indices, if this is going to go lower, what should we see take place in the DXY? Right? Let's just start there. Right? If this is supposed to go lower, and it does, and this one ends up going higher, what'll that do to the DXY? What should that do, given the fact that this is the heavy driver behind what those assets do? Right? It's the heaviest influence in terms of intermarket relationships. So if this goes lower, what should the DXY do? Without even looking at the DXY chart, what should it do? Let me know in the chat. I should phrase that differently. What should the expectation be? So if the yields go lower, what should that do to the DXY? Go lower, exactly, Mike. So the yields going lower dictate where the DXY is going to go, because this is positively correlated with the DXY for the most part, right? So if this is going to go lower, it should drag the DXY lower. To further confirm that that relationship is healthy, right? We want to see, if we're expecting DXY to go lower, we want to see this drop, and we want to see this go higher, right? So yes, the yields and the DXY are, for the most part, positively correlated. They're not lockstep correlated, right? Like, you're not going to see the same exact price structure happening. Direction-wise, you should, if it's a healthy trending environment, in this case to the downside. Same thing is true if it's going to the upside, right? But if the DXY is expected to go higher, we want to see this prove that it wants to go higher and have a reason to go higher. And then as a result, we would like to see this decline if we're going to confirm a higher DXY. And then, of course, that should send the other assets lower, right? So, yeah. So that's essentially the relationship. Does that make sense to you guys? If you guys haven't written down this relationship by now, you absolutely need to. You 100% need to. It's one of those extremely vital things. That's why this relationship is the exact reason why I spend so much time here on Sundays. Some people don't understand it. They get on, I'm not talking about the NASDAQ or whatever, and they don't hop on, or they don't stay on. Little do they know, we're literally building the narrative. So then when we get to those other assets, it takes like 2 minutes for us to figure out what's going on. And we have real reasons why, aside from just, I think this order block's going to hold randomly, right? Like, this is why I've been able to call the market on a weekly basis, daily basis, monthly basis, literally, in such an accurate way for 9, almost 10 straight months, right? And that's a big statement, but I've come out publicly live doing it. and you can go back and rewind and hear some of the things I've said, and then just watch the result that's taken place as a result of those videos. This is a huge reason why, because I am very proficient in understanding this relationship. And then my students as well that are highly accurate, they also are very proficient in understanding this relationship and what happens to the conditions when price completely is consolidated, right? Like, what does that do to the other assets, right? Brown said, my first outlook with you, you're pretty thorough. I was wondering if you spent this much time on the... Oh, yeah. Oh, 100%. 100%. Right? We don't just obviously fly through, but we come to a determination by very quickly by building this narrative here. It's like this is the ground floor, and then when we get to the indices, we're at the top floor of the high rise, right? Like, and it's just, we see the whole picture, the whole city, right? The whole landscape. And it makes you, because again, the point of this channel, right? I started because I wanted to provide clarity so then you guys can build trust behind what it is you're doing. And then of course you could run on your own and become profitable. I can't guarantee you profitability, but I can guarantee you clarity, 100%. I can get you to realize exactly what price is doing, why it's going to do it, why you can trust it. But then again, you are still going to have to walk on your own, obviously pick the model, decide when you're going to take executions and whatnot. But this is a hugely important thing, very effective thing or process that helps traders get that clarity. And then, of course, like I said, you walk on your own eventually, and then whether you become profitable or not is going to be in your hands. But you get to I basically bring you to the water, right? And the rest of the effort is just you scooping the water up, drinking it, right? And that's your model. That's like trying to figure out what session to trade. So on and so forth. Manage risk, right? I give you guys advice about that too. Brown said, I like it. I'll be tuning in weekly. I've always been weak with my knowledge of bonds. Oh, perfect. Yeah, perfect. I appreciate you you saying that. I'm glad that you've been seeing value from the video so far. I'm very thorough, right? A lot of people have TikTok brain. Okay, so they want to be on things and get a 5-minute video, and they don't want to get the full details. They just want the answers. And I can give the answers all day long, but if I'm not live, that means someone's not going to be doing something, and that's stupid. Why trade if that's the case, right? And sadly, most of the people that become traders, which is why 90% of them fail, have that mindset. Like, oh, I need to just, where's the entry? And it's like, okay, well, so you're trying to be subservient and have someone else do this for you. And so when they're not here, I mean, that's not a plan to be able to be profitable with this. That's not a plan long term to make this a true asset, right? And something that you could pass on to your kids, to your family, to your friends, and maybe, pass on to others, in a way, in a similar way that I'm trying to do, and we can make the, trading industry better if we have more people that know what's going on, that are willing to speak up. But, of course, it's obviously a personal decision. So yeah. Yeah, I appreciate you finding value in it. I definitely am thorough. Sometimes to people's dismay, because again, people got TikTok brain. So, but I've discovered that the way that I do things definitely weeds out the people that aren't serious, and I don't want signal junkies stalking my page for executions that I give. I give signals. Those are my private group. They tell you right away that I do give signals, but the way that I do it, I make sure that your hands are in it too. It's not just you taking my hand and I'm pushing you, right, and getting you in things. I'm putting you in front of the fence, and you still have to jump the fence, right? I'm bringing you to the water, but you still got to scoop and find your model and do all the things that are personally required. So you can do this yourself, So yeah, because that's the objective, right? Get you guys from confusion to clarity and get you walking on your own, so then you can go help change the world or change your family's life, change your life, have an impact, right? So yeah, it's always been the goal. So yeah, you definitely will have a home here if you like thorough breakdowns and actually knowing what's happening and why you can trust things. But it's obviously not going to be something for someone that has TikTok brain, sadly, right? I wish I could save everybody, but I've learned over 200 students privately that I can't save everybody. It's unfortunate, right? But yeah, you guys hop on regularly. Those of you that hop on regularly, you've been seeing amazing results, and I'm super proud of you guys for sticking to it, right? It's not always pretty, right? I'll be the first one to say that it's not. But you can understand where price is going most of the time, right? Which we've obviously proven very consistently, right? So stick to it and be thorough yourself, and you will be surprised at what you can accomplish. That's for sure. But yeah, so hopefully all this stuff makes sense, right? And we will continue to walk forward with this and see if these levels can hold. I will actually throw this up there, kind of spread it around. We got this one too. We'll see if we can get back down below that and then reach for these equal lows. I mean, we just clearly see that these lows here are just beautifully set, and we're right there. I don't think they'll break up and not attack that, especially with the rate cut. It's a rate cut. This is a rate here. So if you cut a rate, what through the lens of common sense should happen? It should drop, right? It should go lower, right? If the rate's been cut, right? Well, seems like that's already begun happening, right? So we'll see if that wants to continue. Okay. And again, hopefully you guys gathered what I said about the relationships that this has, and hopefully you guys were able to write it down, right? This dictates where DXY is going to go positively, right? So if this goes lower, DXY goes lower, so on and so forth. And the other assets should do the opposite. Moving on to the bonds, right? Whatever this does has a high impact, heavy impact on what the indices are going to do and the foreign currencies. And a lot of times as well, it'll impact the commodities in a positive way too. Like a positive correlated way, right? So if this drops here, right, and it ends up rallying, it should end up dragging the other assets higher. And it should be something that further supports a weak dollar, which is the sentiment of what the dollar's been looking like. It did kind of rebound a little bit, but I mean, I'm not too surprised. We'll talk about DXY in a little bit, but yeah, it's not a surprise off the heels of this rate cut that there's a lot of stuff that's trying to fool you. It's going to try to pull you on the other side. And, we're going to have to just sit through that and watch what it's going to do. But overall, the context, it should go lower if the yields go lower. And if that's going to go lower and we're going to be in a healthy environment, correlation here should be reversed to the yields. Okay, so if this is going to decline in here, we got a very similar scenario taking place when it comes to the bonds versus the yields. It's similar but opposed. Okay, so the yields are retracing to a bearish fair value gap, while the bonds are retracing to a bullish fair value gap. So similar to the yields having a bearish balanced price range, we could see here that we got buy side taken here, sell side taken here, and we got displacement shifting market structure. So this should be, this should act as a BPR bullish. And so similar to the line in the sand on the other asset, on the yields, my line in the sand is going to be down here, right below this fair value gap, below this order block here, because if I move up, these down candles created an order block. I think on the 2 week, yeah. So it's ironic that the mid portion of this order block on the 2 week is perfectly aligned with what I just outlined as a BPR. Isn't that interesting? Order blocks, a lot of other PD arrays, they're bringing you to a form of a balanced price range. That's why we don't want to see the middle portion violated. So in this case, it's an order block. So we don't want to see this order block violated, and we want to see this fair value gap that we just identified, or had identified. We want to see that respected as well. Here, I'll move this actually. We had an inversion fair value gap over there I used. I think we can just use what's here. Right, so we should see the opposing thing happen in this asset to the yields. Okay, so we should be able to see price hit this and potentially go up. Is it going to do that in a week? Is it going to take a couple weeks? Is it going to just hang around in here? We have to wait and see. We don't know, right? We can't assume when we look at the economic calendar days Whenever there's a big news event, that could be something that triggers in the move higher, or just, stimulate a move to liquidity, right? We are pretty much tapping into this already. So I'm not sure how deep it's going to want to go. Because we have trading here that's overlapped this fair value gap, I would prefer to see us leave this available, right? And if we're going to be exceedingly bullish and exceedingly bearish in the yields, but bullish in this asset, and like really bullish in the indices again, right? Based on the last 20 times, right? That's what's happened. If that's going to happen and it's going to be fast, I would really like to see us leave the lower portion of this available. Because if we leave that available and it displaces, say it breaks above the middle portion of this, that is highly influential and highly, like a high confirmation that we're heavily bullish. Okay, if it leaves fair value gaps available, if it barely touches or strongly reacts just by barely touching an order block or doesn't touch it at all, those are signatures in price that are heavily bullish, right, or heavily moving in that direction. Same with wicks, right? There's a large wick that maybe trades, into the candle that we're trading into, right? Like say this is trading into a large wick. Not hitting the 50% level or not even attempting to get down to it, maybe it trades to 25% and then rockets up. That is another signature that's telling you that price is heavily bullish. Same thing is true if it's bearish, not able to get to a bearish wick, right? The 50% level. So these are little signatures in price delivery that can help you real time identify signatures that are supporting, in this case, bullishness. So this is a fractal concept too. So if you're on like the 1 minute, same thing should be thought about, right? The relationship to the different PD arrays, what's being left, right? How strongly is it responding to these different PD arrays? Like if this was the 1 minute chart, right? It would be no different than what it is that we're looking at here, right? It's just this takes longer and those lower time frames are obviously working within this, right? But it's all universal, okay? So hopefully that makes sense. But yeah, overall, this is pretty much all I'm going to need to have here. All right, you can see that one of these very old new week opening gaps was strongly reacted from, which is pretty interesting. So yeah, we'll put that, and don't forget what I talked about at the beginning of the call about what levels are important. Right, the current candle is high and low. Before it gets down to deeper levels in the fair value gap or before it breaks up to this high, we still got all this range and some of this liquidity in here to take out, right? Maybe we open up this new week and we get like a wick that goes into that, sweeping out the previous week's low. That may be used as counterparty liquidity to the buy orders that are going to seek this buy side delivery. Okay, and that obviously fits beautifully inside of this fair value gap, pushing price higher, the BPR being respected, okay, and just the continued influence that the rate cut will have based on the last 20 times, which is heavily influencing bullish price delivery in this asset plus the foreign currencies and the indices, right? And it should be bearish for the DXY. All right, so that is kind of the battlefield we're dealing with. That is the landscape, right? And that is what I'm going to be trying to observe. Next week, I would like to see this low get swept and then have a dynamic price delivery to the buy side. And then we can look to offload any type of interest to the buy side at these highs up here, okay? So the sell side I'm using is this. Hopefully we can get a wick for the weekly candle and then a strong movement to the buy side. That's what I'd prefer. Will that happen 100%? Maybe it sticks around a little bit, right? We'll see. We have a lot of news next week, so I wouldn't be surprised if it does rip, right? We are at the end of the month, though, so we got to keep that in mind. It may wait till October, right? Like the first week of October, right? Maybe it uses NFP or something in order to get us up there, right? That's a possibility. I'm not going to assume that that's the case until price shows me what it wants to do. I am going to assume, though, that buys should be more of interest. But if it does look like it wants to trade a little bit deeper into this fair value gap, so be it, right? We could adjust real time when it comes to that, right? But overall, this is the landscape, like I said. Do you guys have any questions based on the things that we've talked about so far before I start to move on to the DXY currencies and the indices? Just throw a 1 in the chat if everything makes sense so we can move on, or if you have a question, you just let me know. Just throw 1 in the chat if you're good. Don't want to leave nobody behind. 1. All right. All right, perfect. So we will move on to the DXY now. Kind of got a mess in here, don't we? All right, so got that weekly order block. It's been really interesting. We called this quarterly fair value gap when price was all the way up here, and look at how significant it's been all the way up to this point. I mean, it's used all the quadrant levels numerous times. Like, it's very interesting stuff. But yeah, so if we take some of the annotations off, let's actually go to the full chart. Okay, so this is the weekly perspective. Let's actually move to the monthly real quick. So we could see how this has become an order block, right? I would have preferred it traded through it. What do we see here though? Is this moving one direction? At least right now, it has been moving one direction, which is why we've been bearish for literally months, right? We haven't changed, even in the face of this. If you go back and look at what we talked about in July, we made a determination that this was going to stay bearish, and the lesson that was taught within that was very powerful, having to do with the invalidation validation rules and trusting the higher time frame delivery. Notice the wick never got traded to, so what did it do? It continued. No structure was broken on this monthly. No structure was sincerely displaced above on the weekly. So even in the face of a large bullish candle, we didn't change our perspective, right? So that was a very, very strong lesson back in July. For those of you that maybe have a hard time sticking to your narrative, we really real time saw how important it is to trust these higher time frames, and just why it's so important, and how it can help you stay grounded in where price is going and why, right? And so nothing's changed, right? Unless price was to break above this, disrespect this order block, and close above the 50% of this little wick in here. Displacement above that would put us in position to maybe target something like this, right? Or just simply this high up here, maybe even may get targeted. We'll see, right? We'll see what happens. I'm going to just continue to trust that this is going to push lower given the bonds and yields analysis we did. This is going to show why it's so important to trust the bonds and yields and to start there, because those impact what this is going to do. So if the yields are going to drop, that's going to drop this. If the bonds are rallying at that same time, that puts you in position to sincerely trust that this is going to go lower, because that's just the way it is. Like, that's just how the market works. Some things impact certain things, and fundamentally it's just the way it is, and that manifests in the chart, right? And knowing that back end information and how things operate, and you're able to put those things on top of your analysis, it really, really is liberating, right? It helps you trust things like this, right? In the face of price going against you sometimes. It helps you stick to your bias until proven otherwise. And our invalidation idea, 3 PD arrays being violated, things getting inverted, and the bonds and yields going against whatever is showing here, all of those things really help you learn when it's time to change and adjust, or if it's time to just continue to hold on, which we have been. We could see that this is overlapping though, so it's kind of sketchy, right? It's kind of stuck overlapping candles again, right? We had a whole conversation about that a minute ago. So we got to make sure we're cautious, right? Doesn't mean you be fearful, but you could just see it's been a mess, right? The dollar also has digitization going on, which I don't know why people think that hasn't happened. It's already happened. You look at your bank account, it's already digital, right? So, I mean, I'm not sure where that's going to go. I'm not really of the opinion that we should go digital because it just gives these corrupt leaders more power to control your finances rather than you having it physically and, you know, fully owning your money. It's just very, very sketchy. So, you know, hopefully we can keep our paper dollars. That's something that I would like. But all that stuff has an impact, right? The changes in economic policy, all that stuff, interest rate adjustments. That is the whole reason why we see this kind of stuck, not really interested. This has been manipulated to go lower because lower dollar equals less expensive exports for our exporter market, for our farmers, for our products that we ship to other countries. So that's something that benefits the U.S. with a lower dollar, and that, in my opinion, is why prices decline. We've had that opinion since back here in February when we mapped out this whole market maker sell model, and then used this down delivery as a bearish breaker and continued up to this point to be bearish. So again, similar to what we did with the bullish candle here, how we stuck to our narrative, we're going to still stick to the narrative unless we were to get above some of these upper levels and really, really displace above there. Otherwise, all of this can be seen as a potential, just stalled out consolidation to possibly retrace to go lower, right? And with the interest rate things we talked about, that should continue to remain to be the case. We did get this strong reaction from this low. I really don't like that. That's not overwhelmingly convincing that price is overwhelmingly bearish. A lot of times when this happens, it could reverse. Like when we hit a higher time frame level, right? It was a drill that I told you guys to do like a week or two ago, to go look at higher time frame levels and look at the reaction. What happens once those higher time frame levels are met? Just so you can kind of see the importance and like the conditions that arise when price hits a higher time frame level, especially if it's been one-sided, right? Like what happens and what your expectation can be. And sometimes this happens. And, we just have to now wait and see because we're consolidated. If we take the fib, let's go see. We got buy side taken here, sell side taken here. So if we measure that out, we got equilibrium a little bit above. So price may look to reach a little further. We do have this bearish order block here on the weekly. So we're still in line with price continuing to hold and go lower. That somewhat can change if we start seeing a strong displacement that gets above this, basically invalidating this. We would definitely have to move up and continue to monitor some of these larger levels in that case, because the higher you go up, the more meaningful the levels are, right? Because these are the parent time frames, and then all the lower time frames are like the children that follow whatever these larger perspectives are doing. Okay, so whenever you see, say, like a daily chart level get violated, you immediately should move to the weekly chart to see, does that support what's happening here in the weekly, right? And you do the same thing. If the weekly levels are taken, you move up to the monthly, right? Is the monthly supportive of whatever that delivery was? And you could start to justify or not justify a particular move that's taking place, whether it is going to validate or invalidate something that you're looking at, right? So yeah, hopefully that makes sense. But again, we're basically stalled out. It's been a mess, okay? So we're going to see what's going to happen as a result of this. We have purged a low. I'm still interested in seeing this go lower. That's still supported by the bonds and yields, especially if we get a displacement in the yields. We have to see what that's going to do because that's going to heavily influence what this is going to do. Okay, and then we'll get more clarity in terms of that. But again, overall, because nothing's changed, our opinion won't change. We definitely got to keep in mind that this swept this low and we've returned very quickly back inside that range. So it's kind of had a very dynamic response off of that. So we'll see if that's short-lived, just to basically suck buyers into the market potentially, just to basically victimize them because the higher time frame hasn't changed. We'll see if that's what's going to happen. It's definitely something I'm going to consider going into this week. And yeah, hopefully we don't break this high, because if it breaks that high, we may look to target a little bit deeper up into the buy side. Something that we do have to map out here is this gap down here being overlapped, right? So we got to see, is it going to use that? It's used it already as support, and it's pushed us up a little bit. You know, if you go from this high to that low, right, that's the current dealing range, right, the buy side here. So swing high to the low. We've dug really deep into a big premium based on this high to that low. So again, if we took this low and it leaves this BPR and we shift above this high, we are not looking for price to go lower until it really, really tanks again. And that may have an impact on the indices, right? And there may end up being a cracking correlation between the bonds and the DXY. We've had to experience that a couple times this year. And obviously we were still able to find opportunities. It just means that the risk is higher, you know, because at any moment the switch could be flipped and things could go back in line with the correlation with the bonds and yields when it comes to the DXY, foreign currencies, and the indices. Right, so that's a very important factor that we have to keep in mind at all times. Right, and then you know, if I get this question all the time too. So when price correlation is messed up, does that mean that we just don't take a trade? And you guys have seen, if you've been here for a while, no, that doesn't mean you don't take a trade. It just means you need to consider lowering your risk, though. It means that you need to make sure you're not doing anything like reckless, over trading and over leveraging, right? It just means you have to be cautious, right? And just realize that it's lower probability. Because the more of these things that you could stack in your favor, you're building high probability framework for yourself, right? And the more that you understand this process and the relationships and how certain things affect what, and you know, you understand the validation process, you know, what liquidity pools are important, which I've discussed today, and I have a list of in my free Discord and in the private group. All those things help assist you in high probability, right? So yeah, you want to keep all these things in mind, right? So yeah, when it comes to the DXY, my opinion, I'm not going to really have too much of a crazy opinion in here. We do got some of the new week opening gaps. That's what these gray boxes are. It's highlighting Sundays. So then your eye can immediately jump to, okay, this was a week, so that was a previous week, so this is the previous week's high, right? This is the, you know, other week. Here's a new week opening gap, new week opening gap in here. We got another one in here. We have basically multiple in this area. So if it was to break above this high, that's another thing that's very important in terms of a trending environment. If it's violating multiple new week opening gaps and new day opening gaps, that is a heavily, in this case, you know, bullish market, at least for the time being, or trending market, I should say, right? If you're violating multiple new week opening gaps, multiple PD arrays, in this case to the upside, if the yields were rallying and this was doing this, those are some heavy signals that price is moving in that direction in a healthy manner. Okay, so yeah, we're still in the process of watching how it's going to treat this. Again, this could very easily just be a retracement to then try to drop lower. It's trapped. Anybody that had their stops below here, anyone that was trying to short, right? Anyone that was buying got stopped out here. Anyone that was trying to short got trapped because they got maybe a sell stop. Some people like to have an order here to get into a sell when it breaks down below a low. This absolutely crushed those people, right? So that could simply be what it's trying to do here, logically. And it's pulling back, you know, if we move to the monthly chart, if we move to the weekly chart, it just simply looks like, you know, purge that out. Did structure end in terms of bearishness? No. Has multiple PD arrays to the buy side been violated? No. Have we started to show some slight red flags that it may look to, you know, maybe dig a little bit deeper to the buy side? Yes. You know, what are those? The quick response from this low, that's a bit concerning. us not really showing much respect to this order block. That may change going into this new week, right? So we're just going to have to see. It's a gray area that we're going to have to wait for, which is why we don't trade Sundays. We want to let it kind of print the start of the weekly range a little bit so we can get a feel for what its characteristics are early on. And then, of course, we got the new week opening gap that's been violated. We do have the balanced price range that's potentially formed here that needs to be broken again if we're going to trust downside. And we have, somewhat of a line in the sand above this high here, at least for this time frame. And then if that was to be violated, like I said, we're going to have to move up to the weekly and then watch what it does there, see if it can't rebound and continue to drop, or if it's going to completely change, right? So we're in a mode of anticipation. Obviously, the bearishness is still intact. We need to gauge whether this is going to just be a retracement to go lower, or if this balanced price range here is going to lead to these upper levels potentially getting targeted before price looks to fall in line with what the rate cuts like to do, which is favor lower dollar, higher other assets, right? So yeah, that's essentially some of the stuff we're going to watch. We're going to continue to be one-sided, look for this to basically be a retracement to go lower, but this is definitely a red flag. So if this stays intact and we close above this, which it seems like we already have, and then we break this high up here, I am certain that we'll take out these highs up here. Okay, that's how my targeting would be adjusted, right? The if-then scenario that takes me away from targeting the low down here, which has already been fulfilled, to then targeting the buy side up here if this was to be violated, right? And then we would look to try to see this go higher. That would probably result in something like this happening in the indices. Maybe this is kind of telling us the future, right? It's maybe reacting a little quicker than the indices because the foreign currencies are obviously completely diametrically opposed to the dollar, right? So it's not very surprising that GBP and the euro have tanked because this strong response that trapped these people down below here, they're reverse correlated, the other currencies to the DXY. So, it makes sense, right, how this reaction has happened. So we'll see, right? We'll see if it wants to break this high. That fully confirms our interest to want to go to the buy side. And then we'll trade relative to that. We'll anticipate that this will probably give some type of topping effect, or there will be a crack in correlation with the dollar and the indices. That could be the case. There's a lot of things happening geopolitically, so we can never take that out of the equation, and we have to obviously navigate accordingly, right, with what it shows us. And sometimes when things are cracked in correlation too much, which is what we had to do this year with the bonds and yields for a decent amount of time. Sometimes you have to just go off of what the like DXY and the indices are doing. Sometimes the DXY is going to be cracked too, and it's not going to be following what it should be following based on risk on, risk off. In that case, you would just basically use what the indices relationship is against each other, keeping in mind that your risk needs to be lower because the correlation's cracked. So it's not as high probability as we would like, okay? Doesn't mean that there won't be an opportunity to engage in. I've shown that all year, right? We could trade whether it's correlated or not. But these are foundational things that we got to think about, right? We have to make sure that we're not, missing some of these details because, again, we're trying to get clarity, right? And the more things that you can align yourself with that impact the market in one way or another, the more that you can understand these factors, the more accurate you could be, the more trust you'll have, and the more confident you'll be, and the more clear you'll be able to see price action, which generally can result in you obviously taking confident decisions in the market, right? So yeah, this will be my line in the sand, just to put a ribbon on this, right? So these are some of the levels. We got this bearish order block here on the weekly perspective. This daily order block's kind of being blasted through. So as a result of that, we kind of disregard that and we move up to this weekly chart, right? And we're going to watch how the response is here. Again, this is potentially the line in the sand for me, right? If it breaks through that aggressively, then that's going, here I'm going to show you something that overlaps, which is pretty interesting too. Let me do that. Okay, so isn't it interesting how this high here that I outlined, oh wait, whoops. Whoop, let me, well, well, this is the high, right? So if you drag that over, it's actually 50% of the weekly bearish order block. Okay, so that's very interesting, right? That the line in the sand that I pointed to on this daily chart being this high, it's the 50% of that weekly bearish order block. So again, we got to see how it would behave if it was to get up there. Because if it runs up there, sweeps that high, and then aggressively reprices lower, we may be back in line with the bearish order flow. And all it was trying to do was trade into the order block and then reject aggressively off of the heels of that. Right? So that's a scenario that we also got to keep in mind. It's just a good example of, the daily may be showing you something, but again, remember, the daily has a parent. The daily has a higher time frame that's above it. And if that higher time frame above it ends up disagreeing with the daily chart, that higher time frame that's above the daily chart is going to be the one that really shows you the narrative, and you want to trust that, right? So just like if like the 15-minute chart's going higher, but we're in a bullish daily order flow on the daily chart, obviously that 15 minutes is going to be short-lived. It's going to fold to the daily perspective. It's going to reach for that daily objective instead of, that 15-minute, dictating where it's headed, right? It's just setting up things. This daily chart generally is setting up something that the weekly chart's delivering, right? So it's very important to understand this time frame to time frame analysis and how things need to be looked at, right? And you can never lose focus of what these higher time frames are. This is why I don't understand why some people don't gravitate to the higher time frame, because you clearly see that this is what's going on, right? Like you see the impact that each time frame has to each other and which ones are more important when it comes to narrative. But I mean, it does take a little bit of time to get used to that, to really submit to that idea. And again, people have TikTok brains, so, most of the time they just want to be on the 30-second chart and, call it a day. But, that's what makes us different. That's what makes a lot of these traders that you see that are big, that are doing very well, that are spectacularly, getting crazy payouts and constantly doing amazing things. They're very thorough, right? They're not, it's not like they overcomplicate things, but they do have a depth of understanding that's way beyond what most people understand. And these are all different elements of that, right? So yeah, we'll keep this in mind. This high, right? I'll put it as a line in the sand. That's what I wanted to mark this off as. I'm not sure if I have that. Let me see. Okay, so we will keep that, move that out of the way. That right there. All right, so hopefully the daily, the DXY higher time frame makes sense. We do have this daily fair value gap 2 to watch. That's inside that weekly bearish order block. So again, we want to watch how price is going to react to this stuff. But overall, we're going to stick to one side, right? There's people that do this whole up arrow, down arrow. We build contingency plans. Yes, that's what this is, right? But we're going to stick to the fact that price is going lower because the higher time frame hasn't changed. And we look at the weekly chart, this could simply just be a retracement to then go lower. So we're going to stick to that idea potentially forming eventually, but we are going to keep our eyes on this as well, just in case price was to blow up through this and just completely erase that, right? Once it does that, we're able to then confidently get in line with the opposing view, right? So that's when we would then transition from one direction to the next, depending on what levels get taken, how they get taken, and what intramarket relationships look like at that time. So again, we're going to stick to the fact that this is bearish, right? We're going to stick to the fact that these are going to be potentially the line in the sand, and we'll make adjustments if needed if it breaks above those levels. But all in all, hopefully this can end up sticking to the narrative going lower. If not, we'll be able to adjust, right? And again, we have this daily fair value gap down here that did invert, and it has not really treated it, or it has treated it as something that's going to support us going higher. We'll see if that's short-lived. And maybe you won't be confident enough in this going lower until this stuff gets respected and it trades back down below this. There'd be nothing wrong with that perspective, right? I know that I have some students that probably feel that way. They've mentioned that to me this last week. So there's nothing wrong with that, right? If you have to wait. There's maturity in the fact that you need to wait, okay? And, don't, if that's how you feel, don't let that be something that kind of feels like a hindrance, because not every moment in the chart requires a trade or even, allows a trade. You got to have rules, and, because you don't want to be sucked into things that are bad scenarios. And right now it's a bit uncertain until we get displacement, right? And we got to see if it's going to respect this, or if it's going to disrespect that. And then maybe we have to make adjustments, right? But overall, like I said, before we move on, I'm going to stick to price using this as a retracement to then go lower. And then, of course, if it was to violate this and break down below that, that just absolutely confirms that we're going to continue to go lower, and the rate cut effect is going to be in full swing. And we'll probably see this get even deeper. We have a monthly fair value gap that's way down there that we could target. It's also, lows and different things. So, but that's way far away. That's going to take a while to get there. So we'll worry about that when the time comes. Okay. And again, like I said earlier, right, the 20th day, right, from September 1st to the 20th day, and then all the way to the 60th day, within that range, there's going to be some type of either shift that goes against what's been happening, which in this case has been bearish, or it's going to shift back in line after it, kind of went opposed to it to set up the continued move. But generally, again, that should be able to take place in here, given the quarterly shift analysis ICT teaches, the tactic. Okay, so that's another thing that we're going to keep in mind, okay? So yeah, hopefully our perspective on the DXY makes sense. Now we'll move on to the currencies. So at this time, after all this stuff that we've talked about, all this time that we've spent on these other assets and, talking about the importance of them, what they impact, all these different things, hopefully that shows that we have now been given a good amount of back-end information. So then when we look at this chart, it should be easy to determine whatever it is that we're trying to see in price, right? Based on the things that we've discussed, right? So yeah, if we look at this monthly chart, we could see that we do got some pretty significant highs up here. We could see that the wick here was respected. It did purge out the buy side here. We do got S&T, so that's a bit concerning, right? That would support or be in line with the potential for DXY to actually run higher, right? If this S&T is going to be supported and push price lower, DXY is going to have to continue dropping, and I'd prefer to see the yields maybe even break above and do what we talked about, right? To maybe get up here, and then maybe the rate cut, delivering downside in the yields and the DXY, maybe it comes a little bit later, right? That could be the case, right? It could have a very strong delayed response. Just because the rate cuts came doesn't mean it's absolutely going to happen right away. That's the gray area in the market. Sometimes timing takes a while. So this is why you don't force your will upon the market, right? So if something changes or if something's not fully in line with something you're assuming, you have to be able to be flexible, right? You have to force yourself to be able to not be married to ideas. And you have to have a plan and a way to adjust, right? Like I was talking about on the DXY, we have an adjustment plan. And if it's not going to support continued downside, which it has been for, so long up to this point, if it changes that, we have to be able to be flexible and be okay with it. Otherwise, it's gonna be a mess, right? You're gonna be all over the place trying to force things, and that's not a it's trying to force things onto the market. That's not a mature trader mindset. The lack of experience is exposed in people's need to force things or to trade every day or take every single thing that doesn't maybe line up with your setup, right? You just have to push the button. It highlights or illuminates the lack of experience, right? The lack of patience and all that, just lack of understanding, right? So we understand the market, right? So we got our frameworks laid out. So again, with all these things that we've just talked about, let me actually refresh all this. We got a little too much going on. Just start from ground zero. All right, so looking at this monthly chart, again, first thing we can identify is obviously swing highs like that, right? The failure to get up there. So let's put SMT. Okay, so we'll see if that has any impact. Right, if we do start to get displacement, we do got this order block here. But first, let's map out this. This is the current monthly high. Let's go to the monthly high. The current monthly low. Okay, so I don't know why it lags, but I don't know why it lags to do that. But yeah, so we got that. We got an SMT at a bearish order block. Okay, so this is something that we definitely got to pay attention to. The way that we can confirm that we are going to blow something out, or blow out this high, right, and really be confident that it's going to get up there, like within the next, day or week, we want to see price get up above the 50% of this order block and close above it. Show little to no respect to that. Otherwise, we have an SMT and a respect to a bearish order block that may end up pushing price down to something like this. What's been holding this going higher has been this high to that low. This candle was a breaker for those of you that have been with me for a while. We've been using that to push price higher. And then we got this rejection. We trusted that it wasn't going to just completely fall off because of this, right? I think there wasn't even any gap in there, was there? So we do got these equal lows down here too that may end up being something significant. And then again, we got this over here. It's got a fair value gap. So these are levels we definitely want to keep tabs on moving into this new week as we end this month. Let's see where it is. Okay, so we'll take a look at that. Right, we'll keep that in our view. And again, this is going to be very significant, what I mentioned here. This is going to be the significant area in price. Of course, we're still within this monthly range. This is the current monthly candle, so this is the extreme low, extreme high. It's been an indecisive month, right? And it's technically, this is overlapping. So again, it's a harder to trade environment, right? It makes sense because we went into a new quarter, right? And we're just getting out of the summer months. That's what all of this was. This was the summer months, quarter three. All right, because what? 1, 2, 3. So these are the 3 quarters. So this is a quarterly high here, and this is the quarterly low. We got equal lows there, right? And we're kind of hanging around equilibrium. If you take from this high to that low, it's stuck right at equilibrium, right? We've been mentioning equilibrium a couple times today. So again, we got to break out, right? Is it going to break up and disrespect this to fully confirm that this buy side delivery is not over with? And then we could reliably target the buy side. I'm assuming that should be able to take place. We're not quite there yet when it comes to this completely turning around. The SMT here, in respect to this order block, may tell us otherwise, though. That may be a good sign for us to then look to target something like this in the near future. And then whatever it would do if it got down to there, obviously we'd have to see how the reaction would be. And if it got down there and overlapped that, then that would push us down even deeper. But I'm not assuming that that's going to happen because, like I said, the rate cut should have a certain impact, right? So we'll see. And yeah, so this will be a very important level here, at least from this monthly perspective. Okay, but until something changes, nothing changes. Is this bearish? Does this look bearish to you? If you're looking at this chart, if it was the 5-minute, would this look bearish to you? I wouldn't think so. The S&T would be a bit suspect, but I would be, I'd have to see like this low get violated if this was the 5-minute chart. Because remember, things are fractal. So if this was the 5-minute chart, what would you be looking at, right? What would you think price is going to do if you looked at this? I would think, well, it's going to have to push through this, right? Similar to what we were thinking, knowing that this is the monthly chart. And if it was to want to go lower, we would have to break this and shift lower, even if it was the 5-minute, whether it's the 5-minute, 1 minute, 20-minute, 3-hour, quarterly chart, right? We would still need to see this potentially get violated, if we were going to try to go lower. But again, early signs would be this being respected and, continuing to push lower off the heels of this S&T, breaking down below this. That fully confirms the bearish overall delivery. It's been really bullish, right? So, we may see price look to, respect this a little bit, try to attempt to get down there one more time. Again, we're just going to have to see. We do have an order block here too, so closing below the mid portion of this order block would be a bearish idea. This is not an order block because it didn't break above the high, right? So it didn't turn on this as an order block. But we do have this bearish order block here, okay? So if it continues to respect this and say, displaces down to here and gets closer down to this level, then obviously we may have to target that. Obviously, to see that, we need DXY to go higher, okay? Which may, we see there's potentially early signs. But again, we have to see the things unfold that we talked about in the DXY to confirm that. And so that's kind of something that we're going to have to use to wait for this too. Technically, though, looking at price, again, like I said, we have this order block, 50% level, the S&T. So we got to see how that's going to behave, how price is going to respond to that. And like I said before, and have been saying for the last couple months, we are still working within this, which is a breaker. Okay, so we could see that it still hasn't really disrespected the breaker level either. So again, if this was a breaker on the 5-minute, is this disrespecting the bullish breaker? Is it totally turning it off, and are you like completely convinced that it's going to go lower? I would not be fully convinced. I'd need a little bit more information, right? Because we don't change our narrative or opinion in terms of where price is headed just because, one level gets taken out or it hangs around. It needs to fully confirm. Early signs like this, though, right, respecting a bearish order block, S&T forming, DXY potentially supporting it, that may be something that eventually leads to this going lower. Right, but again, this is on the monthly chart. It's going to take a little while. So if we move down from that on this weekly chart, if we reject this, look at how strongly it's rejected that, right? Not only is that a monthly order block, it's also a weekly bearish order block, right? We do got these relative equal lows. Those look pretty interesting. So I would say that, again, if we break down from this level off the heels of the S&T, right, and maybe this breaks down as well, and DXY does prove that it wants to go higher, if we can violate this wick midpoint, I will be confident enough to target this low. And then once we break down below this low, my attention goes directly to here, right? And whether it uses, that, maybe it sweeps that and then still comes back and uses this breaker to continue going higher on that super big time frame, that could be something that takes place too. But with what's important right now, this wick is important. We got this order block here. That's a bullish order block. So you could kind of see that we're trapped between a monthly bearish order block and a weekly bullish order block, right? And a monthly bullish breaker, right? So price is very much indecisive, right? Which kind of shows when you look at this monthly chart. So again, we're at a time where if I was trading currencies, which I'm not, I would be needing to wait for more information, right? I'm going to continue to hold on to the idea that this is still looking like it wants to go higher because structurally nothing's changed, unless, of course, it breaks down below this low, right? If that doesn't happen, I'm still looking for price to want to try to target the highs up here, right? So again, the if-then scenario is hopefully clear. That's not buy or sell ideas looking just, to make sure that regardless of which one happens, we could be correct. No, we're going to continue to stick to buy side until we see further evidence that, this wants to change, right? And it doesn't want to go lower. And until we see this low or the 50% of this wick get violated, we're going to stick to price looking to go higher, right? It's a bit suspect, so I would be hesitant to engage. I would need more information, right? And a mature trader that, doesn't want to push you into being a gambler should be able to confidently come out and say stuff like that. When it's time that they need more information, they should be able to honestly come out and say that. If they're not, then obviously they feel like they have something to prove and they have to be correct all the time. And that's just not the reality of trading. We've been pretty spectacular with bias and narrative, and some of these types of scenarios have been there. And, we've mentioned when there's times that, we got to wait. And, it seems like for this asset, it seems like things are somewhat looking like they may want to go against what's been happening, in this case, bullishness. So we got to just wait and see how this is going to behave, okay? And so this order block here and this wick, they're going to be very significant in that process. Of course, we're inside that monthly bearish order block. So we're kind of trapped between a weekly bullish order block and a weekly bullish wick in a bullish environment. We're stuck between that within the SMT and then the monthly bearish order block as well, the bearish SMT as well. So we're going to have to see which one it's going to submit to. You take it from this high to that low, like I just showed you earlier, we're also stuck at equilibrium. So we're in an area that's very, very low probability if you were to buy or sell. So we're going to need price to really open up a little bit and get out of this mess. Because, basically just back and forth, right? With a undertone of bullishness though. So yeah, hopefully that makes sense. Hopefully that makes sense as far as what we're going to look for and wait for the currencies. Hopefully everything we've already talked about has made sense as well. I'm trying to find my weekly. There it is. So yeah, we'll see what happens as a result of this month ending. It's been a very bullish month. Well, let me see. Actually, it has not. September. Yeah, we're not fully done with September, obviously, but it's been an indecision month, right? It's very, very choppy, and where price is at above these highs, trapped between a bullish weekly order block and a bearish monthly order block, SMT, new quarter, at the end of a month. It makes sense why this is the overall characteristics that we've seen, right? It's kind of stuck, right? It's an indecision month. And there's been rate cuts. There's been a lot of things happening this month. So it's not surprising that this is what it looks like up to this point. All right, so we'll see if it can break out. Again, we're favoring potential ideas to try to go higher unless this is violated. If that's violated, it'll take this low out. Once it takes this low out and breaks the middle portion of this order block, our attention goes to the lows down here. If it doesn't do that, then we just continue to look for buy side delivery. All right, so we're going to stick to that opinion. All right. Now, last but not least, well, do you guys have any questions before I move on to our final stretch? We finally made it, right? Appreciate y'all sticking with me. Yeah, you guys got any questions? If you don't got any questions, just throw one in the chat. So yeah, when it comes to the currencies GU and EU, bullish undertone, higher time frame still bullish, but it's a bit indecisive, so we need more information. Right, so that's the opinion on that. But yeah, throw a 1 in the chat if everything makes sense. Just want to make sure I'm not leaving anybody. 1, okay, cool. All right, so now let's go to the indices. Well, as you guys know, we're kind of just in all-time highs, right? So all-time highs, you got to just keep pushing it higher until it proves you otherwise, right? Don't be sitting around waiting for a deep retracement, right? All-time highs are a bit difficult to trade. You know, it's very likely that you'll be fooled if you're not trusting the higher time frame narrative. Yeah, Mike said, do you refer to bonds, currencies during week or on lower time frame? Or during a week on a lower time? Yeah, I'm constantly flipping back and forth. I'm more or less looking for what direction they're going in, and then I'll go to maybe the 15-minute. If I'm executing a trade, I'll definitely go look and glance at what the other assets are doing. It doesn't have to be perfect for me to be able to take an execution if it shows up properly, say with the DXY and the indices, right? If my execution lines up with what that's doing, and the overall sentiment is in alignment with what the bonds, yields, and the foreign currencies are doing, I'll still pull the trigger, right? I definitely do look at, I'm glancing at everything at all times, right? Bonds and yields, if I notice that they're kind of stuck in consolidation, I'll just put them to the side a little bit and then focus more on the other assets, see what I can get in line with, right? What's correlated and what's not. But when the bonds and yields are out of alignment with what I'm looking at, I'm automatically lowering my risk, right? If the bonds, yields, DXY are all out of sync and it's not lining up with anything at all, I'm definitely lowering my risk. Because that's the first step in high probability trading. Is the market symmetrical? That's the very first thing ICT has said that we need to pay attention to for high probability. Is the market symmetrical, right? Is everything working together? Because that's, again, that's a heavy impact on whether price is going to be high probability in one direction or another. And if it's not, if things are cracking correlation, it's low probability. There's still ways to obviously execute, which I've shown, and it could be highly accurate still, but at the same time, the switch could be flipped at any moment, and things could get back in alignment when it's cracked in correlation. It could happen at any moment. A news event could come out, and it's been cracked in correlation all week, and then all of a sudden everything is just perfect again, just all of a sudden. Right? So that's why you have to be very, very cautious when you're trading against correlation or if something's cracked, right? You just got to be cautious. Don't be fearful, but you have to move to different things to confirm what it is that you're trying to do. Like maybe, if the bonds and yields and currencies are doing whatever the hell they want, but the DXY and the indices are good, then you could just go off of that correlation and then glance back and forth to the other assets and see when they get back in alignment. But yeah, that's, kind of how you want to look at things, how you want to, kind of dissect them. But yeah, I look at the bonds, yields, currencies. I glance at them constantly just to see what they're doing at any given moment, especially if I'm looking to execute. Because if I'm about to execute and everything's in alignment, I know I could probably risk my normal size, which is anything from 5 to 7 contracts. But if it's not, I'm down to 2, 3, 1, maybe even that amount on a micro, right? So it's my way of helping myself know when to push, when not to push, and how I can calibrate my risk. I manage my risk in a dynamic way. It's never really the same all the time. It just really depends, right? I have a checklist I give my private community. We have A, B, and C setup trades for the models I use. It's kind of universal, though, for everybody. And, if it's a C setup, obviously I'm going to probably cut my risk a little bit, But if it's an A plus setup, I mean, I'm just not even going to worry about it. And I'm just going to get in, get my, full leverage, and I'll be good, and then get out. And it's universal, the rules that I put it's for every single model, so you want to make sure you have a checklist for what it is that you do. But yeah, it's definitely part of the checklist when it comes to decision making. I'm definitely referring to bonds, yields, currencies, everything. I'm keeping my attention on everything. I at least get a feel for what some of these other assets are doing, and then I focus mainly on obviously the asset I'm looking to engage and the like DXY and stuff. But yeah, you got to make sure you always have a good idea of what's happening. If some of the other assets like the bonds, yields, currencies, if they're stuck in consolidation and they're not doing anything, you might have to put them to the side a little bit, especially if we see this type of trending environment happening in the face of those assets not doing anything. You definitely got to make sure that you're cautious, right? But you just put them to the side and then just engage what you see happening between the correlation here and potentially in the DXY, if it's workable. But yeah. So yeah, hopefully that makes sense, right? But yeah, looking at this, obviously what goes up must come down. So we don't pick tops, we don't pick bottoms. We're still going to just continue until proven otherwise to push price higher. We are very, very overvalued in the U.S. stock market. I am a bit concerned that it's so massively pumping. I mean, look at the reaction because of the rate cut. It's just continued, just instantaneous. Like we had a huge decline, but it rebounded in 2 seconds. And that's kind of what we expected for the last couple months when we've been anticipating this. It's going to have a bullish positive effect. I did really, really, really want to see us come below here, right? I thought that they would, be able to do that when we were in here, because then I would have set us up with opposing liquidity here to then have a long-term rally. They left it available, so it's kind of wild how they just left it. But the order block held in here, order block here held, order block here held. So they all pretty much did the same thing. So yeah, looking at this weekly chart, again, we got the weekly high here. It's really close near-term target. We'll see what happens if it opens up, purges that. Maybe it wants to dig a little bit deeper into some of this. I would not be surprised if it did that. We would definitely be able to get in line with something like that too. But keep in mind, if any shorts are going to be counter trend. Counter trend trading process is you cut the risk and you're only aiming for 20 to 30 points. It's non-negotiable, right? Completely non-negotiable. If you're following my advice, that's just what it is. Very easy, really black and white rules, doesn't change a lot. And I mean, that's just what it is, right? You're your own person, obviously. You can make adjustments to what you see fit, right? But if you're listening to my advice, this is how I do things. This is how I tell everyone that comes to me for advice to do things. So, definitely worth a consideration, at least the risk part, right? But you'll figure out your own little quirky things to do with the rules and which ones you want to follow, which ones, don't make sense. That's the ability you receive by learning from someone that's an ICT purist that has multiple models, right, and multiple ways of doing things. You still have an ability to be personalized, so definitely use that. Don't ever let anybody take that from you, because ICT teaches us to be that way, to be able to be flexible, to use our own personalities and see what fits our model, right? And still be able to have like a personalized thing, even though we're learning very similar things. There's still going to be PD arrays that you see that you think are more important than what I think are more important, right? Like some people will only use volume imbalances for framework on their setup. They'll only use optimal trade entry. They don't like breakers or anything else, right? They'll only use the YouTube model. They'll only use, whatever. Other PD array that they like to use, and then maybe I won't use it, right? And there's nothing wrong with that, right? Or maybe there's a other concept that you like that ICT teaches that I haven't really messed with, or even talk about, that you think is important, right? Don't let me ever take that just because I don't mention something. If you're using something within ICT's world that works for you, do not let like what I'm teaching take away from something that you're using within the ICT world, right? Within the vast library of stuff. Because again, you got to remember, you got to be able to be personalized. It's a very personal thing. Maybe if I'm using a breaker, maybe you don't see a breaker. Maybe you see optimal trading tree. They may overlap. This type of stuff happens all the time. That's why having one model is totally enough, because there's continuation variations for everything and all that, right? So one model can have 5 opportunities in a day. Maybe one on each different time frame. One may take longer to set up, right? Like on the 15-minute, right? Say you miss a 1-minute setup. Okay, move up, because I'm sure you'll be able to find your model happening again a little bit later on. Or maybe even drop down a little bit lower in time frame. Maybe you'll see the model happening again in a continuation fashion, right? So, don't take away things just because maybe you don't see me talk about it, or don't see ICT talk about it all the time. If you've went through a lot of his stuff, make sure that you're noting things that make sense to you, because all of us are going to have things that make sense to us differently. That's the beauty in trading. We can all learn the same model, the 2022 model, for example, and maybe you'll catch the sell, but I'll catch the buy, right? Maybe you're a counter trend trader and I'm not. Maybe you're a swing trader and I'm not, or vice versa, right? It allows you to have that personalized ability. So again, keep that in mind as you're learning. No matter who you listen to, who's in your sphere of influence, just because someone's not talking about maybe something that you think is important, doesn't mean that it's not important. It may be important to you, right? Because like I talk about COT and all these different things, seasonality and whatnot. Does that mean you have to use them? No. Maybe that stuff just doesn't make sense to you. There's nothing wrong with that. It's definitely helpful, and I make it pretty easy to use those tools. But not everything is needed. You'll do just fine with certain things that make sense to you. As long as you know how to call bias and narrative, you know how to target, you know how to manage risk, you have a model that works, that makes sense to you, you know about the timing elements, you know how to manage yourself, the mindset involved, you have rules that stop you from hurting yourself and making the mistakes that you'll make. If you have all these things in alignment, and you know how to navigate the different time frames, validation, invalidation, if I didn't mention that. If you have all these things, you may have all those things covered with a personalized process, but it may be a little bit different to me. But as long as you have an answer to those things, you're good, right? So, I say this because, I don't want to take away the personalized ability, right? Because that's the worst thing that mentors do in this industry. It's really, really, really sad. And then traders maybe don't gravitate to it, right? Or they learn something that doesn't make sense, but there's other stuff that's taught similar to it. Like ICT has other concepts that he teaches about a different topic or the same topic, and maybe a different way or a different PD array is used that then sparks your success, right? But if you're focused on, this guy's stuff doesn't work, or the thing that he taught doesn't work, and you just completely give up because of that, when there's so many ways it's like unlimited ways of doing things. If you just give up because one thing doesn't work, it's unnecessary, right? Again, this is very personal, so make sure you don't ever discount that, right? But yeah, so again, we're just going to keep pushing price higher, right? This high to that low should be able to act as a BPR. I wouldn't be surprised if we open up and price drops, sweeps this low out, then looks to go. If DXY rallies aggressively, we could very well see this top out a little bit, maybe even come and try to take this out, right? I mean, that's a pretty long distance away, right? This is a previous week's low. We do have a wick. We do have this high to that low. It's an order block, right? Kind of small order block, but order block nonetheless. It's delivered from this fair value gap. Kind of came down to this volume imbalance there and shot up. So yeah, you know, we're not going to assume that this low is going to be taken or the top is going to be put in, right? We're going to assume that this is going to keep going higher. Any decline should be able to use something like this to continue to go higher. And yeah, we should just keep trying to target the buy side up here. We do have this low here. I think that's Friday's low. So again, when you go into Sunday and Monday, the beginning of a week, you got to make sure that you are definitely looking at the Friday's low, right? Because just like how we're on those larger time frames, the most recent candles high and low is very important, right? So same with this, right? Going into a new week, we got Friday's high, Friday's low. So it's going to open up inside that Friday's range. So regardless of whether it's going to go higher or if it's going to drop lower and target, you know, some of this stuff, it still has to breach either the Friday's low or the Friday's high. We may open up, drop for the first 2 days, dig a little bit deeper into this wick, but sweep this Friday's low liquidity. And maybe that's going to be the pairing liquidity for the buy positions that they take to continue making all-time highs. Right, so that's a possibility. We could open up, wick above this high, and then target Friday's low for the whole week. Right, that's something that could happen too. Right, does that upset the fact that we're still bullish? No. That's just something that will go against it short term. And you could frame all that just using what I've just mentioned, right? That's why this high and this low, going into a new week, Friday's high, Friday's low, is so important. Because these are technically previous days' highs and lows. This is also a previous week's highs and low, or previous week high, right? So yeah, we got the wick there, we got the wick there, so we got to try to break through some of that. All of this stuff can be used as targets. All of that can be used as dynamic support and resistance, the wick levels, as you guys probably know by now. We talk about this stuff all the time. ICT, I think, came out and started talking about it too, the wicks again. It's pretty interesting how the first things that he's decided to talk about in this new series of things, it's the wicks. We talk about the wicks, been talking about the wicks all year. At this point for years, you know, even before he started really even bringing it out publicly, he talked about it all the time in his private group. So it's nothing new, right? It's all kind of like the same stuff for years. So yeah, I guess that's all I really have for the NASDAQ and the other indices. We're just going to wait and see what happens. You got to think power 3 going into this new week. Okay, always. When we start a new month, new week, new quarter, we always got to think of power 3. We're in a new quarter now, so we got to keep in mind power 3. It has been extremely bullish. Just overall, what goes up must come down. I mean, this has been a ridiculously historic recovery because all the fake news nonsense is the reason why. It's the reason that they used to punish the market, take it all the way down to a yearly bullish order block, which we called the low of this year. And then the rebound has just been absolutely off the hook, which I expected, right? While everybody was screaming with their hair on fire, we were calmly waiting to pick the low. And we picked the low of the year this year. So I should have held the trade that I took down there. I should have just swung that. Maybe I'll do that next year. Maybe. I don't like swing trades. It takes too long. But yeah. So hopefully, again, everything's made sense. I guess we'll leave it here. Right? Keep tabs on the volume imbalance here. Volume imbalance. We're going to continue to try to push price higher. So the start of the week, we'll anticipate potentially targeting this. Maybe come down here to then go higher, set the low of the week. and then just keep pushing it higher until proven otherwise. Okay. So yeah, with that being said, do you guys have any questions, any last minute questions before we go? Covered a lot today. Hopefully you guys got value. If you guys got value today and get value with the content I provide and the live calls I do, definitely don't forget to like the video, subscribe to the channel. It does a lot for the channel, so I can reach people just like y'all who don't have TikTok brain. Okay, there's nothing wrong with them with TikTok brain. God bless them, but this is a industry that requires a lot of attention to detail, and if TikTok has rotted someone's brain, which that's how I see TikTok and the content, people's attention span has just been under attack. So if you're able to focus, you're in the top 1%. If you could focus on something for more than 5 minutes, you're doing a lot better than most people these days. Sadly, it's so. But yeah, don't forget to like the video, subscribe to the channel. If you guys don't have any questions, give you guys a second. Oh yeah, no worries. Yeah, we could do that. Pull up gold. Alright, so yeah. I don't think gold is going to be bearish anytime soon. The only bearishness I could reasonably see happening is just to literally pull back into this setup to go higher. Right? Remember, if the bonds are going to go higher, it's going to follow. This is going to follow generally what the bonds are going to do, for the most part. It doesn't do it perfectly all the time. It's kind of just the way it is. Gold is very driven by real-world events. There's also a real supply and demand factor for gold because it's a commodity. Unlike indices that don't use any type of supply and demand because there's no physical product that can have a supply or have a demand like that, or in that relative term. Commodities like gold, silver, wheat, corn, any of the food, agriculture, oil, gas, all that stuff, there's real supply and demand factors that appreciate or depreciate the asset. So it's could be a little complex. It's also very driven, gold specifically is very driven by real world events like wars and things like that when there's uncertainty in the economy. So obviously there's been so much uncertainty the last couple years. Gold has just absolutely exploded. Gold has done better than most assets in general, aside from Bitcoin and some of the other assets. But yeah, gold I think has performed better than every asset, including the whole entire stock market. It's done spectacularly from what I've been hearing. And of course, because gold's doing this, I get calls constantly from people trying to get me to get a gold IRA. I should have probably listened to them, actually. I probably should have listened to them, got involved way down here. We called this to go higher the whole entire time. This is another asset we pretty much predicted because of the wars. So yeah, I think this should be able to drop down and go higher. But I am focused on this continuing to run. If it does want to drop down and get down to here, we'll see. We'll see what happens. If the yields rally and the bonds decline, and we see the DXY explode to the buy side, like we said, could be a possibility based on what we were looking at. And we then invert this, right? If we invert this weekly fair value gap, that would then put us in line to target the trend line liquidity here. Right? Why is this important? What is it going to be like? Oh yeah, trend line. No. This is literally liquidity because everybody thinks it's going to come back down and go higher, come back down, go higher. So what is probably going to happen if it gets down there? It's probably going to hit it and then go lower. We just automatically expect that the trend line is going to be invalidated. And be targeted. Like this is liquidity. Like we would take a short at this inversion fair value gap to target the liquidity down below the trend line. Right? That could be this low, that could be, one of these candles lows. Assuming that this was the top and overlap this, Because then what does this create if it overlaps this fair value gap and gets below it? What does that create? Let me know in the chat if you know. You guys remember? So yeah, if it was to break through this fair value gap and overlap it, that could present us with a potential BPR. And that's why this would be, if this got overlapped, that would be a framework I would look to target, the trend line liquidity. Right, so yeah. And as long as this stays intact, that's our line in the sand for gold to continue going higher. And I am absolutely looking to continue to push this higher. I don't think the economic uncertainty in every country is going to go down. I think that it's only going to get more crazy. So sadly, too, I'm like deep down really concerned about all the stuff happening in the world. But, you know, we can only focus on the things we can control and pray for peace, right? So, yeah. So we got oil. Looks like we're going to respect that inversion for value gap and target these lows. That's what my assumption is. And we got natural gas. Should be able to do something similar. Relative equal lows down here. Hopefully. We need natural gas to drop. We need this electricity cost. Well, the gas cost to run heaters and stuff. We're going into the winter, so hopefully that can drop so prices aren't so crazy. And then we got silver as well. Should be able to do something similar. It may not have to go all the way down there though. Silver is one of those things, well, one of those assets that's very dynamic with the issues that happen in the world with wars and all that. Right, so yeah. So yeah, maybe in a week or two we'll come back and check on this and see if we were right. I think we will be. Been right this far, so yeah, with that being said, appreciate your guys' time. I know our calls are sometimes long, but hey, you stick around long enough, you see why they're so long. We talk about all types of stuff, and you become hopefully better after every single call. Hopefully your skill set gets more reinforced with every video, and hopefully you guys feel like your time is well spent here. If you guys do have any recommendations, I'm obviously always open to improving as a presenter, as a mentor, right? So if you guys have any things that you would like to see me include, or you know, ways that I can improve the presentation, I'd be more than happy to listen to any type of recommendations. It's because of student recommendations that my community is formed in the way that it is organized the way it is. You know, it's because of my students over the years. I present things the way that I present them. So again, I'm always open to feedback and whatnot. But yeah, so with that being said, again, hopefully you guys got value. God bless you guys. Hopefully you have a good rest of your weekend. Let me know if you have any questions in my DM, and I'll get back to you guys as soon as I can. And we will be back live here on YouTube on Tuesday this week. And those of you in my private group, I got a couple one-on-ones today, but we'll be live again tomorrow for Monday's trading. All right? So, yeah, with that being said, have a good weekend, guys, and I will talk to you guys then. Talk to you on the next one.